right, if we can, let's get this, I'd like to call the meeting to order. This is a special meeting of the Board of Selectmen being held Wednesday, August 24th in Jackie Durrell Hall in the Fairfield Museum and History Center. And we'd like to start with a Pledge of Allegiance. So I ask you to all stand. And by point of orientation, the flag in front of Old Town Hall is in that direction. So if you will look at our flag, I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. If you'd all remain standing for a moment, we did have a tragic incident where a woman riding a bike was both hit and then eventually passed away recently, so I'd like to take a moment in her honor. All right, thank you. First item on the agenda is a Board of Finance Subcommittee on Fairfield Metro Center to hear a report from the chairman regarding the independent audit. Mr. Kyler.
Is this on? Jerry, is this on? Okay. Good evening, good afternoon, and thank you. Thank you, Mr. Tetro. At today's meeting, we wanted to present a report. We are going to present a report from the Board of Finance Subcommittee on the Metro Station projects. The first order of business I wanted to go through is I wanted to introduce the members of the Board of Finance Audit Subcommittee. And the board is made up of myself, Kevin Kiley, Kenneth Brockfeld, who is sitting right here, and board member Mary LeClaire, who is not with us but will be with us shortly. She's just wrapping up her workday. In addition, we were joined by Joseph Santafanti of Koskin Rufkis, who was the lead partner on our project, and he is the one that was the lead creator of the audit report that we used. Thank you. The first thing I wanted to do was I wanted to thank my fellow subcommittee members, Mary LeClaire and Ken Brockfeld. I also want to thank Mr. Tetro and his administration for their cooperation and for all the information that they provided us along the way. Also, I do want to thank Board of Finance Chairman Mr. Flynn. I do want to thank all the public members who attended our meetings and participated both in the meetings and in the process. And I want to have a special thanks for our recording secretary, Charlotte Leslie, who did a fabulous job keeping us on track and in control. Also, I want to quickly thank the Board of Finance as a body and the RTM for both meeting on short notice and approving funds to conduct this audit. We learned a lot from this process. We learned about things that we can do better, things to never do again, and the need to have much improved financial controls and budgeting on town projects. The committee, as expected, went into this project with an open mind and a blank sheet of paper. We were not predisposed to a position on the project or the need for funding. We were committed to the task of completing our work and reporting back to town bodies within a very tight time frame. I'm proud to say that we achieved our goals and met our deadlines. I'm also proud to have worked with Mary and Ken, and the two of them truly distinguished themselves as members of the Board of Finance, as members of this committee, and as volunteers to our town. Thank you very much. Our reports are very detailed. They provide a complete history of the project from inception through June 30th of 2011. They provide findings and recommendations for improvement, and the reports clearly identify where every dollar was spent along the way. We believe the audit was thorough and complete. However, as in business, any financial audit is dependent upon the accuracy of the information provided by management. That said, Mr. Santafanti and Mr. Santafanti will also comment this, can also comment on this. The committee found no evidence of malfeasance or fraud from our investigation. The report is very professional. The report is not personal. It is not political. That said, I will now briefly walk you through the narrative from our report, which everyone has received, and then I will turn it over to Mr. Centofanti to do a quick update on his findings, and from that point we can take questions from the Board of Selectmen. Okay. The narrative that I refer to is the 4-page document that's at the front of the complete report that everyone received, I believe, last Friday night. Again, the members are Mr. Brockfeld, Mrs. LeClaire, Mr. Kiley. The background. In response to a presentation given by First Selectman Tetreault to the representative town meeting on June 27th, Board of Finance Chairman Thomas Flynn called a special meeting of the Board of Finance for June 29th. In general, that meeting was called because the First Selectman's report suggested that there could be potential overruns in the Fairfield Metro Station projects in the $2 to $6 million range, and these had not been previously reported to any town bodies. A brief history of what happened. On June 29th, the Board of Finance met in special session. We took a few actions that night. Mr. Flynn created the subcommittee. Mr. Flynn appointed myself, Mr. Brockfeld, and Mrs. LeClaire to the committee. We discussed the duties and charge of the committee. We appointed the firm of Koskin Rufkus to be the auditors to work with us and for the committee, and we also appointed Mr. Centofanti as the lead person on the audit. We reviewed and accepted the engagement letter from Mr. Centofanti's firm that laid out the procedures that we were going to follow and the scope of the work to be done. And we approved the $20,000 resolution to fund the estimate for that engagement letter. Subsequent to that, on August 2nd, after it was determined that the project was taking a bit longer and was going to cost more money, the Board of Finance, followed by the RTM, approved an additional $15,000 to bring the total funding for the project to $35,000. The charge of the committee. The Board of Finance Metro Center Audit Committee will focus their efforts on tracing all the funds from the inception of the project through June 30th of 2011, making sure that all funds are spent in accordance with the bond resolutions and contracts, and that we review and, where possible, improve the system of reporting and financial controls surrounding the expenditure of funds. This is the only way that we can be assured of knowing how all the funds were spent and that the project is being completed as efficiently as possible. The Board of Finance is limiting its actions to a review of the financial considerations of this project and any issues that arise from that financial review. We were given a general deadline to have our work done around mid-August. We finally agreed upon August 22nd, which was this past Monday. We delivered our report last Friday night, which was the 19th, a couple days in advance of that. And I do want to thank the committee and Mr. Centofanti again for not just getting the work done, but getting it done efficiently and ahead of the schedule by a couple days. We also committed to meeting here tonight. We're going to meet Friday night with the Board of Finance, and then next Monday and Tuesday with the RTM. We conducted 9 meetings from July 11th through last Thursday night. Every meeting was noticed and posted. We had public comment at every meeting, which was welcomed. I gave 2 verbal updates to the Board of Finance on July 27th and again on August 2nd. Our conclusions and recommendations. There are many. I have some brief top-level comments to make, as does Mr. Centofanti, but I will go through this quickly. We do want to thank again Mr. Tetreault and his staff, because without their cooperation and information, none of this would have been possible. We heard a lot of public comment, which was great input. We do appreciate that, and we appreciate everyone working on a short time frame, as were we. Mr. Centofanti's firm did a great work. If you look at Exhibit A in our report, you'll see Mr. Centofanti's background, and I hope that you'll agree with the committee that we didn't just choose the right firm, we chose the right person within that firm. And if you look at his background on forensic accounting and fraud investigation and other qualifications that he has, I think you would agree that he was the right guy for the job. So thanks, Joe. Okay. We were very concerned as we read through Mr. Centofanti's report. The report details a project that is sorely lacking in financial oversight, budgeting, supervision, projections, and inconclusiveness. we were struck by the former First Selectman's decision to exclude the town's chief fiscal officer from virtually the entirety of the project's planning and implementation. This was evidence when the committee was informed that there was never a member of the finance department present at the ongoing weekly meetings where there were project managers, construction personnel, engineers, and consultants. We also believe that the decision to not hire a project manager or create a building committee certainly contributed to the problems this project now faces. While the committee understands the management style that left the chief fiscal officer out of the process, we were indeed surprised and concerned that the town's CFO did not take a stronger stand within the administration to express his concerns with the ongoing project. This really stood out when we discovered expenditures outside appropriations and purchasing guidelines. We are also very concerned with the lack of a formal budget. A revised budget process, it is more than likely a budget would have been required and adhered to. The purchasing, finance, economic development, and public works departments could not properly plan and perform their duties that were required of them without a budget. We recommend that all future bond appropriations have a budget and a detailed description of the project scope attached to them. This would require all significant changes to a project to return to the appropriate boards for approval. In Exhibit D, you will see a summary of all project expenses through June 30th and the projections to complete the project over the next couple of months. This was a report that was prepared and delivered to us by the First Selectman and given to our committee on August 12th. In Mr. Centafanti's audit report, there is a bridge between that report and the report format that has been previously distributed by the First Selectman that will show where we were on June 30th and where the administration's numbers are on June 30th and how to get back to the same starting point or stopping point, considering that would be June 30th. Another concern of the project was lack of supervision. There were several town employees that were given responsibility for management of portions of the project in addition to their normal job responsibilities. They were not provided with accurate and complete information to complete and perform these responsibilities. We were impressed with their diligence in keeping the project on track and maintaining records, although they were working outside their field of expertise. Because the project was divided into pieces and spanned many years, there was no project manager to report to or financial project reporting other than the First Selectman. With this led to several inaccurate interpretations of funding and expenditures. We anticipate that the new project manager will resolve these issues. The manner in which funding decisions were made also raises many questions. Work was performed and contracts amended without regard to funding availability. Monetary grants from the state and other authorities were assumed and spent before funds were received or confirmed. In addition, the administration never returned to town bodies to properly inform them of changes in the project or seek their approval when they were spending outside previous appropriations. We recommend that the Board of Finance review and update our current purchasing and bidding policies. I happen to know that this process is underway now, and the information from this report will dovetail into those efforts. These updated policies should be distributed to all department heads to help strengthen the town's internal controls. We also recommend that the town's internal auditor review at least annually every bond appropriation for proper expenditures and documentation, and to periodically review a sampling of contracts, purchasing, and bidding to ensure that all town policies are being consistently followed and applied. Additionally, the amended contract by the former First Selectman appears to reduce or eliminate the funds available to do the roadway intersection portion of the project. We were not convinced that these issues were addressed in a proactive way. This led to a funding shortfall for the intersection project, while at the same time cost escalated. The Chief Fiscal Officer should be included in all projects which require town funding from the early planning stages until completion. We recommend that a formal budget be maintained for all bond appropriations, entered into the financial reporting system of the town, and compared at least quarterly budget to actual. The Board of Finance needs to receive these reports. In spite of the concerns raised above, which are many, and you'll see many more in Mr. Centofanti's audit report, which is more lengthy, we did arrive at a conclusion and a recommendation, an additional conclusion. The subcommittee came away strongly supporting the first Selectmen's mission to complete the project in a timely fashion. We do believe that the Fairfield Metro project is in the long-term economic interest of Fairfield. The station should spur economic growth and provide additional tax revenues for future years, as well as provide much-needed commuter parking while reducing traffic on Interstate 95, the original goals of the project. We also hope that the commercial aspects of the project will come to fruition as the economy improves. Additionally, we have been convinced, within reason, that the monetary cost of abandoning this project would exceed the likely funding request needed for completion. We look forward to hearing the first Selectmen's report and request of town bodies. We anticipate supporting the necessary actions he will recommend to complete the important project for the town. Finally, we hope that our report will be used as the starting point for a bottom to top to bottom, reevaluation of how Fairfield does business. We expect our town leaders will more carefully examine what went wrong on this project and will undertake to apply these findings to improve future project management. There are a number of exhibits, A, B, C, and D, which are referred to. I won't bother going through all of them. And at this time, I'm going to turn the microphone over to Joseph Centofanti and allow him to make a few opening comments on the audit section of the report, and then from there we can go to any questions that the Board of Selectmen might have. Thank you.
All right, most of my comments, if you're looking at the report, are going to be in the executive summary section, so I'm just going to highlight some of those and then respond to the questions subsequently. So the executive summary section, the first couple, ES1 and ES3, are just to provide the known costs and the known expenditures as of June 30. And that's at a very high level, and there's a little bit more detail on some of the schedules there, some of the schedules that are in the back. But that's just showing, again, known costs and known expenditures, just for perspective where the project is on that specific date. And looking at ES1, just to make a comment that's in the narrative, it looks like the project has a positive net change at the bottom. You know, it's a little bit misleading because of where the project is as far as completion, and it's not considering anything as far as the projected costs to finish. But just as of that point in time, because of $6 million in bonds and the $4 million were all funded up front, it looks like it has a positive operations as of that day. So again, that is a little bit misleading. So hopefully that addressed maybe somebody's question on that one. The intersection is kind of in the opposite position, where that one, because the project is just about completed, it's showing that that there will not be, under the current funding will not be adequate to finish that project. And then ES2 and ES4, basically just, again, for perspective, a very high level perspective, looking at the contracts as they were originally approved, and then the changes that were made to the contracts, you know, at least through June 30. And again, this just adds a perspective of one of the reasons maybe why the project will end up with a cost overrun, is there were changes that were necessary for a variety of reasons that have been talked about throughout the report. But again, it's just a perspective on what happened over the life of the project through June 30. As far as some of the financial activity of the project, the overview of that, as Kevin had mentioned, is we didn't know, other than the one item that needs to be considered, that $38,000, but all the costs charged to the project were appropriately charged to the project. There were a couple minor little things, that might not have been charged correctly initially, and those are in Exhibit B. But overall, again, taking that off the table as far as everything we looked at belonged in the project. The approved authorizations, again, looking at that from the way we approach it from an audit perspective, and this will need some more discussion, is, you know, the best practice is that the authorization to spend is independent of funding. So looking at, we see a $10 million appropriation, and all of the state grant came in and created a $29 million project. You know, the big picture, we would like to see the $29 million approved by, you know, the authoritative bodies. Again, that would allow the creation of that budget and the monitoring and those type of things that are in the recommendation that Kevin referred to. Things that happen that are in Exhibit B that happen in every audit that we do. There's always one or two things you can't find. The big picture, and again, the recommendations, I'm walking more over the big issue, and then there's very specific recommendations probably around these issues, or multiple in some cases. But the project financial management is an area that really didn't work, as was alluded to. I think, again, 4 different departments or multiple different people being involved in the project. No one had all the information at the same time, or was actually clearly given responsibility to monitor the project from that perspective. And then again, the finance department didn't have some of the paperwork, some of the information, or what the grant agreements were, et cetera, to be able to adequately be monitoring the financial aspects. Reporting from what we learned seemed to be more informal between project management and town project management and the selectman's office. But there was no single point of monitoring of everything. Again, the reports were the 2 different projects, and it was certain information, and it wasn't complete. Again, multiple people, all with some information, but at no time did it all ever come together in one place, so we can really see what the financial status of the project was. Again, the no team meeting, there was no assurance that all the information was communicated and everybody had the right information that they needed to make the decisions that were being made or to resolve problems. From internal controls and related policy and procedures, it appeared that, again, decisions were being made without complete information. So the assumptions being made on funding that was available, or changes to contracts or change orders that were done, weren't based upon by looking at, well, do we have the money to do that, or what do we need to do to get the funding in place? They were just, part of it was based upon the assumption that the bids came in lower so that there was more money available, and that was never, from what we could see, actually checked on, looked at, and someone confirmed that there was a specific amount of money available, or how much of it had been used, and how much went to one project or the other project, those type of things. And based upon not having all that information, there wasn't a formal budget type thing. You know, capital projects normally function, you know, the approval is kind of the total amount. The budget would be more of a management tool, but at least to monitor some of the major pieces, and that would have started or allowed some identification of something that wasn't going as expected, or if something was incorrect or incomplete, or that type of thing. So without that in place, and the different funding sources, our project status report wasn't available if it was requested, because all the information wasn't in the system. And again, there's multiple recommendations that address those are the high-level areas that I think there needs to be some improvement in their process and controls. And I'm not going to walk through those specifically, respond to any questions. So those are kind of the three big areas as far as from what we said. Again, there's a lot of schedules, a lot of information. It's just more historical. Here's what happened. Here's what the status is through June 30. But I do want to walk through just the bridge quickly. And so looking at, I think, the Exhibit D in the committee's report, which I don't have the... And then it's Exhibit C in the report in the back. Oh, it's kind of in the middle. It's in the section labeled Other. It's actually 42. Okay, did everybody have that? Okay. So looking at okay, Exhibit D and the committee report, and Exhibit D or page 42 in the back section. So looking at total expenditures, I start with the numbers right off of the ES1 and ES3, so the 28.4 million and the 33.9 million roughly. Then there's some amounts that are included in for Selectmen's report that are not included in my report. $1,200 invoice. Then estimated July expenditures. My report is strictly through June 30. What was due and payable, anything in July is done in there. There's an estimate of $600,000 for estimated July, and an estimate of $311,000 for the intersection project. We had a small difference in retainage based upon one vendor invoice of $800, so that gets us to those subtotals. And then looking at, Exhibit D. We take expended to date plus the retainage plus the payable number, that's getting us to the same number. The first column has a little bit of a rounding difference, and the intersection proves right out. So that reconciles basically the numbers as of June 30 to the numbers as of, and the projection in the August 12th report. So as far as overview comments, that's all I have. I can answer any specific questions if there's specific questions on any part of the report or recommendations. Be happy to answer.
All right, thank you. Any questions from the board? Ms. Bennett? No. Mr. Walsh?
Any questions about the report?
Yeah, sure.
Yeah, I have some questions. The cost that your firm is billing the town and the costs were a lot more than what was originally estimated at the beginning. And what was the reason for that?
I think the reason was that estimate was kind of an estimate without looking at any of the volume of information, the number of meetings that were going to be necessary, and those type of things.
Were the records in a lot worse condition than you thought they were going to be in?
In some cases, the records were a little bit difficult to sift through and find the exact pieces that we need, or the signed contract versus the unsigned contract. So I'd say more from the contract standpoint. As far as the financial information, the accounting and the invoices and all those things, those were pretty straightforward, provided to me. It was more related, I'd say, to the intersection project, where the information was a little bit harder to sift through.
Is that because the documents weren't readily available, or were there just a lack of documentation for it?
I think it was more just an organizational thing, and again, multiple copies, some signed, some unsigned, some versions that that were never actually approved. It was just an organizational thing. Finding the exact document was that was the approved document that I should be looking at versus ones that may not have been approved or were preliminary or et cetera.
In your professional experience in having done forensic accountings and other things that, you know, are in your bio, were you surprised by the lack of documentation and lack of controls that were present for a project such as this?
That's hard to answer. A lot of the forensic stuff I do, there's almost no right. So it kind of varies. This is definitely a big project. So normally the contracts and those type of things, I guess, are probably more organized and kind of and managed because of the volume of information.
So you weren't surprised by the amount of, or lack thereof, documentation that existed and the financial controls that existed on this project?
Well, I think the documentation existed in some format somewhere, so there wasn't too many situations where I couldn't actually get the documentation. It was just the effort to get it. Again, we're more going at the organization. You know, some of the control standpoints of maybe how it was managed and the information flow. I'll say that part of it, I guess we'll say, is I'd be more surprised at than the information. Eventually, I think I got most of the information. It just wasn't easy.
Was the information centralized?
No.
Okay. So there is a problem that you found in doing this work, that the information should have been more readily centralized for a project like this.
Yeah, there should have been what I would say some official project files. Here's all the contracts, here's the agreements. It should have been organized, and I should have just been asked, I need the contract for this vendor, and here's all the amendments. It should have been kind of very straightforward type of thing. And again, in some cases it was, and in some cases it wasn't. Again, it was the two pieces were kind of managed a little bit differently. But yes, that should have been clearer. Again, it would have been easier for somebody to understand what is going on and what the project is and what this vendor is authorized to spend. You know, that would have been clear if everything was, here's the contract, here's the 9 amendments. I know I can pay them up to $800,000 without a problem. That didn't exist in some cases. Again, parts of the project, it did exist.
But that's especially true in regards to trying to centralize the documentation and the controls when the town becomes project manager on a project like this, correct?
Correct. That was a critical, or would have been a critical, that all the information, here's the official project file, so everybody knows this is the right information, these are the approved contracts, this is what is going on. So yes, that would be a critical thing, and I do have a recommendation that kind of addresses that specific item.
In your executive summary on page 4, where it talks about under financial activity of the project, where it talked about that all the transactions were properly recorded except for the following, and you named 3 transactions. Are they still trying to get you supporting documentation for the $20,218 of undocumented invoices?
No, I don't think.
So we basically paid $20,000 for some fees, but we have no documentation or invoices to show what they were for.
Right, the transactions in the general ledger, but the actual vendor file, because most of that's one vendor, could not be located.
Did we try to get those invoices from the vendor?
I don't think we did it. Those invoices were from 2003, 2004. They were the oldest part of the project. Most of them are related to the appraisal of the property.
Okay. In the second one, the approximate $40,287.38 of charges that were incorrectly charged to the project, that was on the Brewster Street Bridge, is that correct?
The majority, the $38,569, was the Brewster Street Bridge.
Okay, is that being, have you been told or have you found out, is that being reclassified to another job? Is that going to be taken now and those funds restored to this job? and properly placed where they should be?
I don't know how it's being resolved, but the appropriation for that was spent in full. This was
Okay.
what was over that. So conceptually, there would need to be an appropriation made to put that
Money
somewhere.
back in? Okay. And and were you ever told why those charges were placed in, or charged against this project?
The reason was that the appropriation that existed was fully spent, and this was in the.
No, I guess in going through it, did somebody authorize that payment to be made? That Brewster Street Bridge project? The amounts that were spent out of this Metro Center appropriation, did somebody authorize the payments for the Brewster Street Bridge, which were covered by a completely different appropriation? Did somebody specifically authorize those costs to be charged to this account?
Yes.
Do you know who that was?
I'd have to confirm to be 100%, but I think that was the first selectman at the time.
Mr. Flato.
Mr. Flato authorized that amount to be put there because the appropriation was fully spent.
Did he explain to you why?
I never asked him specifically why, but the appropriation was fully spent, so I really
Okay.
assumed I had the answer.
Sure. In the third one, the $1,717.50, what were those legal service invoices for? And did you figure out why they were charged to the Metro Center project?
I think it was just a clerical. I think they related to. I'm gonna say the Navy Pier, but it was called something else on the invoice. So I think that was just a clerical problem. But I think ultimately it was related to the Navy Pier. I'm not the Navy Pier, the Navy housing somehow.
Okay. The assumptions in both your executive summary and your recommendations, to summarize it, I'm not going to read it, but you stated that the town seemed to make an assumption that the 3 funding devices that were there were basically 100% funding devices, correct? Whereas, for example, the state money, they were really only reimbursing up to 80%.
Well, the 80%, and I know that part's a little bit confusing, the 80% is to reimburse 80% of the cost up to the 19.1.
Mm-hmm.
So if you spent more than that, you would just get up to $19.1 million in reimbursement.
But there seemed to be, from what you wrote, a misunderstanding, and I take it by misunderstanding you're talking about by the prior first selectman, thinking that the state was in for the 19.1, 100%, and we were using that money as though they had written us a check for the 19.1, and that we weren't being reimbursed at an 80% rate, correct?
Correct. That was the assumption that was available. So when the bids came in lower, that was all town money.
Okay.
So that was the incorrect assumption because it was assumed you were going to get the whole 19.1.
And how did
Correct.
how did you learn that that's what the town had that misassumption? Was it from speaking with someone in the administration or some other way?
I arrived at that conclusion just by my reading the contract and understanding the budget everybody was managing to the total contract at 29 point whatever million that's in the state contract.
Mhm.
So that's the number everybody was managing with. But reading the contract, the state said we're only going to reimburse 80 because you have these other 2 pieces of funding. So when I read the contract, I'd say, okay, well, unless I spend enough to earn that, it's not really there. So in a case when the bids came in lower, if we didn't think we were going to spend $4 million, so that was more my deductive reading the contract, understanding it, and knowing all the numbers that were being used to say this is what I have for the project.
No, I understand that that's your reading of the contract, and it was kind of my reading of the contract too. I don't think it was really hidden. The question was, did somebody tell you that what the administration was going on at that point in time was, we thought the 19.1 was ours, and that's the way we looked at it, that they were fully in for the 19.1, regardless of whether the cost came in less.
Yet, nobody explicitly said that, but the 29 million, the total contract, was always used as a number to manage. I have 29 million to spend.
Okay.
But you don't get 29 million unless you spend X. So again, it's a little bit of a deductive reasoning on my part, just on the numbers that were used as what was assumed to be available. Nobody specifically said I assume this.
You reviewed some reports on the project that Mr. Barnhart had prepared. Is that correct?
Correct.
Okay. Were there separate worksheets that the first selectman, Mr. Fleta, was using at the time he was in office that had more information than, say, what Mr. Barnhart had in his reports?
I didn't see any reports from the first selectman's office or any files specifically. If there was some information, I didn't have access to any of that.
Okay. From your review, though, it was the first selectman who was trying to keep a global look on these whole numbers, correct?
Based upon the way things were operating, that's right. What I would conclude is he was managing the big picture.
But in managing the big picture, you've seen no worksheet from his office at that time that would quantify the numbers to see how we were going, budget to actual.
Correct. I have seen nothing other than what was provided by, we'll say, community development, the engineering department, whatever reports that Mark was preparing. It was pretty much the only thing that I've seen through the process. And my understanding that, again, at least as far as those departments are concerned, they weren't asked to do anything until recently, or sometime in February, I think.
Did you request any reports or spreadsheets or budgets that Mr. Fleto's office had at the time?
I didn't, I guess, because through conversation, I didn't think that there any existed. Again, and that could be incorrect, but I wasn't aware that there were any available to look at.
Mr. Tetro, are there any that he did not see? That you've seen while you were in office?
Not that I'm aware of. My follow-up question, Mr. Walsh, if you let me.
Yeah, sure.
Mr. Centofanti, did you see any reports, project reports, with actuals or budget that on the same page included both the Metro Center project and the intersection project, and any status to date?
No, I haven't seen anything other than what your first report was based upon, and then the specific things that Mark has been preparing, but no.
So, Mr. Walsh, back to your point, what I've seen is some projects or reports that Mr. Barnhart put together that showed actual status that concerned the Fairfield Metro Center project. But until we started looking at this in more detail and preparing trying to get our arms around the projects and preparing for the presentation back in June to the RTM, we really didn't see anything on the intersection projects, and that was kind of out of sight and out of mind as best I can tell.
Okay. So, Mike, when you came into office, there was no directory on the town site for the first selectman that had worksheets or anything like that regarding this project or the intersection project.
I think, Mr. Walsh, if you go back to the Board of Finance meeting, I think on the 29th, you had asked some questions about that. I think I had followed up, if I remember the conversation directly, and the first selectman was commenting back, the former first selectman in that case, and you had asked for a project update. He said there had been some. I asked him where, and he said in a folder behind a computer on the credenza that, as far as I know, Ms. Stenick didn't see it all when she took office. It certainly wasn't there when I took office. Nobody in the office staff was aware of that. So that was apparently the only copy of the up-to-date project status at that point. And it wasn't handed off to anybody or kept in any file that we could find.
So you've not found it. Okay. And Sherry, you never saw this file that Mr. Flata was talking about that at a meeting. He started talking, there was munis pages with handwriting on them, and
I never saw
the infamous
any.
file that was left behind the computer on the credenza.
No, there was nothing on the credenza. Well, there were a lot of things in there, but there was anything that would have been related to the train station, nothing, there was nothing that got thrown out, certainly, and there was nothing that had munis reports with writing on it.
And he never gave you any file when he left
Nothing. There was not one
office?
file that said train station. There was, if you looked in the desk, that there were things from like 10 years ago that might be sitting in a pile that had nothing to do with the train station, but might have been an old contract and it wasn't executed. There were things, I mean, there was no, I couldn't find any order to what was there, but I didn't throw anything out because for fear, I left Mike with a lot of paper for fear that there was something I would throw out that he needed, so.
Ms. Stenick's first task to me was to review this stuff before we throw it out, to make sure nothing was valuable getting thrown out.
So it got double looked. I looked, then he looked, so.
So clearly there was no budget that you've seen at all, global budget,
No, I
where
was
somebody was tracking actual to any type of budget.
right.
And a budget that you saw in the munis system was completely wrong, correct? Though one of your statements in one of your things says that the budget that was online in our financial control system was incorrect.
Right, I think that related specifically to the intersection, so those numbers were incorrect. And as far as the railroad project, the only thing that's in there is the $10 million, because that was what the appropriation was.
Okay. All right, was there anything that you, in your review of all the documents and about this project, talked about legal fees and things like that, and whether they were properly charged up against the project, or whether they should be?
Right, I mean, I did look at legal fees, but the extent of my evaluation of property charge is that the legal bill identified the railroad station as the topic.
That was the limit of it, your review?
Right,
Okay.
exactly.
I have no further questions for Mr. Centofanti. Thank you.
Sure.
Ms. Bennett?
No.
All right, just, Mr. Kiley, just, I would appreciate perhaps you and I sitting down at some point, looking at some of the action items that came out, so we can kind of set appropriate priority and make sure that the ones that need to get identified or cleared up closely, cleared up sooner rather than later get addressed right away, so we can kind of do that. So I'd like to pick your brain a bit to make sure that we address those in the proper priorities.
I have some questions for Mr. Kiley. I thought Mr. Centofanti was just taking the questions now. I have separate questions. Is he going to field questions?
Wherever you would like
Great.
to go.
Great. Yeah, Mr. Kiley, you might want to step up. Thanks. I just have a couple questions in regards to your report.
Sure.
And maybe you could just help explain.
I'll do my best.
Sure. After reading Mr. Centofanti's report and holding your hearings, were you surprised by the lack of financial controls that were in place on this project? As a member of the Board of Finance and a previous chairman of that board.
Yes.
But your board was never supplied any type of budgets to actuals or anything like that?
No, we were not provided any reporting on either project on a regular basis by the former first selectman or by the fiscal officer. We did from time to time ask a question or two and have questions answered at quarterly meetings. But other than those responses and verbal updates along the way in response to questions, no, we were not.
Okay. I know there's a lot of surprise about Mr. Heller being kept on the sidelines. I think Mr. Flynn's quote was kept on the beach. And then, so you make some comments about that the fiscal officer was not part of this, was kept completely out of the loop on this project. One of the sentences, and I just want to understand what you mean by it, says, while the committee understands the management style that left the chief fiscal officer out of the process, we were surprised and concerned that the town's CFO did not take a stronger stand, yada, yada, yada. What do you mean by management style of the, what do you mean by management style?
Well, by management style, I think what we really meant is the actions by the first selectman to exclude the fiscal officer from the process.
Okay. Is this something you'd seen before, where you excluded him before? Or I'm just trying to understand what you mean by management style. Like, was this something you normally...
Not to my knowledge. I mean,
Okay.
possibly the phrase management style could be replaced with actions on this project, because based on all the information that we received and all the conversations that we had, and even the comments by former First Selectman Flato when he came before our board, he did mention that, you know, for whatever reasons, you know, the chief fiscal officer was not really empowered or brought into the project as much as I would have thought should have been the case.
Did he explain to you why that happened, other than, I remember when we had a joint meeting with, the Board of Selectmen had a joint meeting with the Board of Finance. He was stating that there was a promise to the state of confidentiality and who could be brought into that process.
No, other than the comments that you're referring to, which were made to the Board of Finance committee or the Board of Finance body, and they did talk about a state conversation or a directive from the state or whatever whatever words he used. Those were all the comments that we received in direct relation to that situation. I think the rest of the opinion comes from just fact-finding along the way, that it was evident by what had happened along the way that the chief fiscal officer wasn't, you know, close to the project.
All right, what do you make of the couple of expenditures that were charged against this project that, from Mr. Centofanti's report, should not have been charged against this project? Number one, the bridge improvements at Brewster Street and the legal bills. Is this something that's going to be transferred back into the project and reappropriated? Or is this something you're going to have to talk about with your board?
I think there's a bookkeeping issue on one that can be fixed, or probably already has been fixed. The one that's material is the $38,600 or so, which was the Brewster Street work that you're referring to. It's my understanding that the Board of Finance will have to take some action on that, whether it's a reappropriation of those funds. I don't know what the legal process needs to be, but I believe the Board of Finance will need to take some action on that $38,000 to make sure that it ends up where it's supposed to end up.
Okay, has there been any, and I'll ask for Selectmen also, would talk with bond counsel in regards to that appropriation? Whether it can exist, whether it needs to be reversed immediately?
Yeah, I just don't know that specific answer. Besides, I think something has to happen with it.
Yeah, I think that the simple answer, not at this point. This is technically our first presentation on the report, so this is the first time we're hearing about that definitively. But as I mentioned to Mr. Kiley earlier, that's one of the set of action items that I want to make sure that come out of this and that we address on a timely basis.
One of the other issues that you addressed in your report was the fact that some of the project people that the previous First Selectman had appointed to this job were working outside of their field of expertise. And to me, that's always seemed to be a problem, that we didn't have a project manager appointed immediately who had professional experience in that realm on a project this size, not just from the town expenditure side, but since we took over the project management of the entire project,
Right.
It seems to be a glaring error. And is that what you were getting at in your report?
Yes, it is. And back to Mr. Centofanti's comment on that topic, the interviews that we conducted with some of the department heads who were on the project did a great job. They worked hard. They worked outside their normal 9-to-5 job, getting things done, doing things that weren't really within their normal bailiwick. You know, For instance, I mean, Mr. Barnhart came to us two or three times, and he was very impressive with his knowledge, his information, and what he had organized. But he was just one piece of the puzzle, and there were many other pieces of the puzzle, many other people who were working on the project in very important roles outside what they normally do. And whether it was too much for any people, whether it was just too much work, or whether it was not having a central point for communication and for oversight, when you add all that up together, you know, it really screams to have a project manager who would have been on charge, organizing these people, or putting people in place that either had the bandwidth or the experience and expertise to be more successful.
In doing your interviews, I know you interviewed Mr. Hurley and Mr. Barnhart.
Yeah.
Did they, either of them seem like they had a lot of extra time to be managing a project this size?
Well, hard to say, but it was evident by interviewing them and meeting them and learning what they knew that they had worked long and hard above and beyond to get to where they were, to come meet us and tell us what they knew. So, I mean, they did a yeoman's job on doing what they were asked to do, but if I had to guess, overwhelmed might be a word you might use.
Mm-hmm.
It's possible.
Thank you, Mr. Kiley, and thank you for the time that you and your committee spent on this report. It's been very helpful, and I think we've all learned a lot from it, and we'll continue to learn as we continue to sift through it.
You are very welcome, and thank you for the opportunity, and if we can answer any more questions along the way, just ask.
Thank you, Mr. Cowell. Any further questions from the board? Any public comment at this time? Thanks, Kevin. Mr. Greco? If you will step up to the mic.
It's actually just a personal comment, is it not? I just wanted to actually say on behalf of myself and Mary, thank you to Kevin Kiley, because he graciously thanked us about 14 times during his presentation, and he did an incredibly outstanding job as chairman of our subcommittee. Nothing would have been expected otherwise, but thank you very much.
Thank you. Any other comment? If you'd like to come up to the podium, please. Just state your name and address.
Pam Ritter, Elm Street. I have attended a number of these meetings, as you know. I wanted to ask,
We're allowing public comment, but not a question.
not a question? Oh,
Thank you. All right, any other public comment? All right, then, I just want to take a moment to say thank you to Mr. Kiley and his team for a thorough and complete report. There's obviously much to be improved on, and much we can learn in terms of how we as a town manage projects going forward and avoid this. It took considerable time and effort on the part of his committee, which I had a chance to personally witness because I think I made most of the meetings. I want to make a commitment that we will take a look at your recommendations and make sure that we adhere to those going forward. And specifically, I like the suggestion that the internal auditor be involved in reviewing kind of more of these projects and make sure we are following the appropriate accounting, because so many of our projects involve building committees and volunteers and people that may not be as fluent in the management process that we need in the town accounting. And certainly we've taken immediate efforts to make sure that our chief fiscal officer and his financial team are involved in all projects like this going forward. All right. With that, I want to again thank you, Mr. Kiley, and we'll move on to the next item on our agenda. Next up is a report from the first selectman concerning the metro station. And if it's okay with the board, I'm going to do that from here. I believe everybody has a handout, and we're just going to take that as we go through. We're going to cover the think we can switch back if you have any comments later.
I'm sure I can speak loudly enough.
We're going to cover project updates.
Mr. First Selectman, I don't have a copy of that. No, wait a minute, unless it's, I'm sorry, my notebook was covering. I apologize. I think I have it in here. Thank you.
We're going to start with project updates, the schedule, expenses, and revenues. We'll cover action items since our last project, and move on to options and recommendations. Looking at the schedule and milestones, this is very similar to the last update. The contract date to finish is still November 13th. We believe we can still manage station opening in late October. So that's obviously subject to the votes and approvals that will happen in the next week. On the intersection improvements, those in our last report were scheduled to be done in July. At this point, they're substantially complete. But if you think about any new construction project, there's a rather large punch list, and we'll step through how many dollars are involved in that moving forward. We hope to have that fully closed out. And the biggest issue, or the longest term item in the closeout, is some of the paperwork that needs to be filed with the state and various grant authorities. Moving on to the project expenses and covering the Fairfield Metro Center project first. Looking at the major cost component is our construction expense. You can see that in the first column we have expended to date, estimated cost to complete, and then the total project cost. I would remind everybody that these actual costs, the expended to date column, is as of June 30th. In the estimate to complete, we have July estimates, and then estimates complete for August and September. And specifically, you can see from the estimates complete, the parking lot, roadway, and site infrastructure is the biggest item to go. The environmental remediation, we still have $2 million there, and that is mostly the excess contaminated soil, and we'll cover that in more detail. Actually, no, it's not. That's environmental remediation that still has to be done. Totaling $27.9 million for the total project, for the construction component. Next up, if we look at the, if you will, the overall project, I'm on page 9 now, the expense summary, and this covers the entire Metro Center project. So the construction piece, or the 27.9, is just one line item or one component of this. We still have the excess soil disposal in at $2 million to be done. We have added a contingency factor of $1 million. And as we look at both the August estimates, the September, and the work through completion, we realized that we were spending up to the maximum or the higher end of the range that we'd identified in our last update. So we thought it was important to add a contingency factor back in at this point to make sure we had a number that would get us through the entire cost to finish the project. That takes our total for the Fairfield Metro Center project up to $40.8 million. You can see that in the lower right-hand corner of the page. Moving on to the intersection. The intersection that we had planned to have done in July is awfully close at this point, but not done. The total is $4.5 million, which is in the range of where we expected it to be. We have about $300,000 more work to do that involve a couple different intersections in the project. Taking a look at the combined expenses, expended to date, $32.8 million. Estimated cost to complete, and again, that is from June 30th on, is $12.5 million. And the overall total project cost is now at $45.3 million. That does include the $1 million of contingency that was added into the project estimates. Turning ahead to project revenues. We did reformat this a little bit differently from our June update to kind of identify two things. If you look down the left-hand column, you'll see the source of the funding. We then added in two other columns to distinguish between the Fairfield Metro Center project and the intersection project. The total revenues are coming in at the high end, which is good news, of where we expected. We had anticipated a possible high end of $38 million. We came in at $37.8 million. Then looking at the work that's been done, the action items since our last update, or more specifically, what's happened in the last 6 weeks. We've instituted daily project team meetings. Every day at 4 o'clock, we bring the project team together to review what initiatives are taking place, what problems have come up, and what actions we need to take to solve those. We have weekly financial updates with our Chief Fiscal Officer and his financial team, along with the project team, to make sure that the numbers, as we're reporting them, are all accurate and everything is accounted for. And as we've gone through the presentation and the follow-up with the Board of Finance Independent Audit Committee, we clarified that their numbers, the accounting department's numbers, and our project management report numbers all tie out and agree, so that you haven't heard about any disagreements or issues with that, so that every expense is being tracked and accounted for. We have a full-time construction manager on site. He started the last week in July. It's been a few weeks. We're starting to see the benefit of that and his help will be crucial in managing the project going forward to make sure we deliver on the numbers that we're talking about here. We turn the page. We've retained independent legal counsel for the contract review. That's been very helpful in preparing this presentation and this update and reviewing our actions and options going forward. We've fully supported the Board of Finance Subcommittee. As I mentioned, I made every effort to attend their meetings, and at many of those meetings were members of my team and staff, so we made sure that they had all the information on a timely basis, even though, as Mr. Centrofani pointed out, we had to track some of it down. We fully supported the RTM subcommittee, and I know I've personally spent the last 2 Friday nights joining them in conference and review, and they have a meeting, I think, set up for after this one also. So we have tried to make not only myself but our team available to them on a timely basis to help them through their questions and provide the information they need. We initiated a review of the contract approval process by an independent legal counsel. Again, that's a Board of Selectmen initiative that was started by this board. We hope to have that complete by the end of September. That is a little more involved than just reviewing the contracts, and that is taking some time, but we look forward to that. The questions being addressed there, I think, are important and serious, and I think this board realizes that, which is why we authorize that action. We've had ongoing negotiations with the Department of Transportation about where we stand, what help's available, and what we need to do to finish this project. We've had similar negotiations with BlackRock Realty. We've explored off-site disposal of the contaminated soil, specifically the excess contaminated soil that amounts to about a $2 million cost number in this project. We have applied to, and just for the record, on the exploring the off-site disposal options, we ran out of luck in the state of Connecticut. If we're going to deposit that soil or dispose of that soil in an approved site, it looks like we're going to be trucking it down to Pennsylvania. We applied to DECD for a targeted brownfield grant or loan. After much discussion and a number of conversations that initially looked fruitful, there is no money available in that program for our project. As we're going through this and listening both to the subcommittees, reviewing the 58 questions that's now grown to about 78, I believe, for the RTM and Board of Finance. There were several key questions that came up, and I want to take a minute to address some of those here. Critical question number one, is this agreement valid? And referring to the agreement being the agreements that were signed last April in 2010. Based on a legal review, this is an enforceable contract. Why is this contract enforceable? One, because it's been represented to all the parties involved that it was properly approved by the town. Two, for the past 15 months, we've operated as though it was valid. The town has received benefit to the tune of about $24 million from the parties. Critical question number two, what are the town's obligations? And there have been a lot of statements made on this, but simply the agreements state as following. The town is obligated to complete the construction of work as defined in a 90-plus page Exhibit A attached to the town developer agreement, to complete the site grading and capping of soil in compliance with the environmental remediation plan approved by the state DEP. The list goes on to include the town is obligated to perform shoreline remediation, complete a drainage system, create a wetland and conservation area, construct a vehicle tunnel, and construct an additional parking lot. Now, there's definitely language in the contracts that has caused confusion for subsequent reviewers. But let's take it from the top and what's agreed to. One, just to be clear, right, when it all boils down, there is one project. That's all there is, folks. One project. When you look at both agreements, they clearly refer to one project. All parties initialed and agreed to a 90-plus page Exhibit A in the town developer agreement. That means BlackRock initialed it, the town initialed it, and most importantly, the state DOT initialed it. All work done at the Fairfield Metro Center has been inspected by STV, the construction inspector hired by the town. What STV does is inspect that work and document the work for state reimbursement. That means the state reviews the paperwork they submit before they reimburse us. So they have full knowledge of what they're paying us for to make sure it's in compliance with the 90 pages and the project definition. LEA, Loureiro Environmental Associates, has supervised all activities relating to the state DEP permits to ensure compliance. The state DOT has frequently visited and inspected the site. The state DOT is completely updated and agrees to all the work being done at the project at every level. I was talking with Commissioner Redeker, and as surprising as it sounds, he actually asked me about the status of the utility hookup and whether we have issues with the gas company in terms of getting that done. That's an amazing amount of detailed knowledge for a commissioner of the state on one project in the state, which goes to twofold. One, it certainly demonstrates DOT's knowledge of exactly what's taking place here. Two, it also shows the importance to the DOT of what this project is. Going on in terms of what has been agreed to, the state-town agreement requires the town to enter into a legally binding agreement with the developer and to accept $4.4 million from that before the state-town agreement is valid, before the state-town agreement can move forward. So the state is in fact, in their contract, defining that we have to have an agreement with the developer to move forward on the project, and it's the town development project that specifies the details of what I said before, so this are listed before. So the state is in fact telling us that that's the project plan that we need to adhere to in order to get reimbursed from them. Simply, the state-town agreement required the town to both sign and execute the town developer agreement. Some additional questions. Can the town scale back work? We've looked for the last 75 days for ways to reduce the town's obligations. We've looked for every loophole we could find. The tasks I listed before are in the contract, are specified and required. They are not listed as optional. All work specified has to be completed. There is no task among that can be scaled back. So can the town scale back work? Simply at this stage, no. Was the April 2010 agreement properly approved? Simply, the Board of Selectmen has serious questions, as I've heard from other citizens and the two subcommittees, as to what the process was there and is that the appropriate process. That is why the Board of Selectmen has asked an independent legal counsel to review and report back on their opinion. What are the town's options from here? We have three options moving forward. Terminate the contract, complete the project, or delay the approval on the bond resolution. If we look at option one to terminate, that would require stopping all work and terminating the agreements. The state-town agreement would require the town to return approximately $19 million to the state. The Guerrero construction contract has termination clauses that total approximately $2 million. That would be made up of retainage that would have to be paid out, profit and overhead for the uncompleted work, and demobilization, of the project team. Moving on, there's an undetermined liability to BlackRock Realty should we stop, though one can imagine they might want their $5 million returned. Monies would be owed to all contractors for any work completed to date, and there would be most likely be some additional legal fees involved to settle the disagreements along that course. In all likelihood, this means the minimum amount the town would be responsible for is $21 million to terminate. There is no easy way out, folks. There's a real probability it would exceed that amount. And funding this appropriation would actually require us to come back with a new bond resolution next month. Option two, complete the project. That would mean approving the authorization to spend up to an additional $7.5 million. This amount includes $6.5 million in additional planned work and $1 million in contingency to cover any excess from July, August, September, or the completion of that $6.5 million work, planned work. In our negotiations, we spent the last 6 weeks negotiating with the state DOT and with BlackRock Realty to, in essence, open up the contracts to get their commitment to contribute to the cost overruns. The goal is to reduce the cost to the town and to the taxpayers. Now, neither party is obligated to do anything. We basically told them we needed help. A year ago, to keep this project going, the town stepped up. And one could argue we bit off more than we could chew. And we went back and asked for their help to see what we could work out. From our partners, I'm pleased to report the state DOT has come through with additional funding. The state has agreed to provide an additional $2 million and possibly as much as $3 million to complete the roadway and the parking lot. Now, mind you, the state agreement that we signed said they would provide no additional funding. So they ignored that clause, went above and beyond to make sure that we could complete the project. The state objective is to open the station by October 31st. They are committed. This date is the driving force behind their stepping up to the plate and giving us the money we need to help move forward. This contribution reduces the town's net obligation from the $7.5 million down to $5.5 million and possibly $4.5 million. I say net obligation because the town would still need to authorize the full amount of the bond resolution because the state would reimburse us from that point. And on behalf of the town, I want to officially say thank you to the state for stepping up. There is a letter of agreement that is attached to this presentation that you can review. I will take pains to point out that that agreement specifically states it's not valid until approved by the Board of Selectmen, Board of Finance, and the RTM. You will note that the state has signed it, but it's missing my signature, and I'm not going to sign it until the boards have approved it. Our other partner, BlackRock Realty, and I left a page for them, has declined to help. When they needed help, they called us a partner, and we stepped up. 1 year ago, they were in foreclosure, and we stepped up. 1 year ago, they couldn't build out 1 million square feet as part of this project, and we stepped up. As of today, they stand to make millions, and they told us to go pound sand. Casting sand it is, but they told us to go pound sand. I can't tell you how disappointed I am. I can't tell you how hard we worked. I can't tell you how many times we met. I was on the phone with BlackRock twice today, and they're leaving us hanging. There just aren't words to tell you how disappointed I am. But we do fully understand their definition of partnership. Without BlackRock's help, this town will manage the projects to completion if authorized. We have a construction manager full-time. We'll continue to look for ways to minimize our costs. We will follow up for additional grants, and we'll continue to look for ways to bring that $7.5 million down, and we will finish this project by the end of November. That's the completion project. Option 3, and specifically in this case, given our town has had 2 referendums in the past 2 years, one of the questions is, what if there's a referendum? What if project approval is delayed past August 30th? This option would prove very costly. The town currently has funds to continue to approximately September 15th. This would allow the project approval at the RTM on August 30th and another 2 weeks to see if there is a referendum option that is initiated. A referendum would delay the project at least 6 weeks. Roughly, it's 2 weeks for the referendum. It's another few days for the town clerk to verify the signatures, and then the Board of Selectmen would meet and set a referendum date within 21 to 28 days after that. This delay could cost the town up to $3 million from the state DOT. So this cost is more than just the 25 grand to run the referendum. If this goes through, that 6-week time window, or frankly any significant delay after the 30th, would keep us from meeting the dates the state has targeted. And if we can't meet those dates, the state could very well withdraw their offer to help. The town would also incur additional costs in terms of the contractor's demobilization and possible remobilization if we needed to move forward. Based on the timing, the cost could involve extending the project over the winter and into the spring due to weather complications, which would keep us from doing things like laying asphalt. The town would be forced to come back to the boards for additional funding beyond the $7.5 million. All in all, a more costly option than I think the town should consider. So in summary, approving the bond resolution and finishing the project provides the least cost option with the maximum benefits. And just to be clear, my team is willing to take on this challenge. We're willing to commit to finish this project for the $7.5 million and to make this a success for our town and our taxpayers. Completing this project allows the town to reduce future tax increases by expanding our commercial tax base, both on-site and off-site around the project area. It also allows the town to improve the current commuter parking situation, and while not a total solution, takes a giant step in that regard. And that's the update as of now. With that, I'll turn to my fellow Board of Selectmen and ask if there are any questions. Ms. Stenick?
Just want to know when the attorneys are going to get back to us about the process issues.
We're looking to have that by the end of September, which means we probably address that the first Board of Selectmen meeting in October. Mr. Wall?
Well, we just got a lot of information just now. And I'd specifically like some time to read this August 23rd letter, which goes on for about 2 pages, and then what the terms of this $2 to $3 million the state is giving us. So if you would maybe have a break for a couple minutes so we can try to get a sense of what this exactly means.
I'll bear with you. And Mr. Walsh, well, thank you for mentioning that. Happy to provide that time. You can see from the date of the letter that's dated yesterday, practically speaking, it was officially signed off on around noon today. So I do apologize to you and my other colleague here that that information was not available sooner. Much of these negotiations were going on quite through the 11th hour, as you can expect, with dollar amounts of this size. So in fact, since everybody kind of has that at this point, why don't we take a couple minutes and give everybody a chance to review that along with Mr. Walsh.
I'm ready.
All right, if we'd bring the meeting back to order. Mr. Walsh, I believe you had the floor. Any questions?
In this letter that's dated August 23rd, 2011, signed by Mr. James Redeker of the Connecticut Department of Transportation, have you had our independent counsel, which I'm not even sure who that is, look at this agreement and tell us whether Mr. Redeker has the authority to bind the state of Connecticut to this agreement?
At this point, no, we did not.
Is that independent counsel here?
Yes.
Can he take a look at this agreement, and can you tell us? I'm sorry, sir, I don't even know your name.
That's Mr. Tim Fisher.
Tim Fisher.
Tim, are you in a position to take a look at that? I
can't answer that question.
Yeah. Mr. Come up to the mic while you're stepping up, and let me just clarify. Mr. Redeker is the commissioner for the State Department of Transportation. His position, and there have been a couple different players in that over the last few years, that position is the position that has signed each of the contracts that we've had in the past governing this work.
Okay, and the reason I'm asking the question, Mr. Tetro, is because a lot of questions in this regard need to be answered now, because Mr. Flato signed a side letter agreement where basically he took $6 million away from the town of Fairfield of parking revenue. And I personally don't think he still has the authority to do that. But he signed a letter of agreement to that effect, and there are some who, and probably the Department of Transportation thinks he had the authority to do that. So I guess my question back is, does Mr. Redeker have the ability to bind the state of Connecticut to this additional $2 to $3 million, or does this have to go up to the governor's level or some other level that we know that this agreement is binding?
Mr. Walsh, if I might, before that, just I want to point out that in the last paragraph of this, it states, "It is expressly agreed and understood that the amended agreement shall be subject to the approval of the town's Board of Selectmen, the Board of Finance, the RTM, and the Office of the Attorney General of the State of Connecticut." So I think in this, we basically have the state's confirmation that the Attorney General is going to review this to make sure it is approved and valid as we go forward. But then I'll defer to counsel.
Okay.
Without having looked at the letter more than you have, I would agree that that's the appropriate characterization. On its face, it appears as the previous documents executed by the Connecticut DOT have appeared, including those that have given us the money that's been received to date. And the characteristic approach that the state follows is that the Office of the Attorney General does review contracts and sign off on them after the business unit or the department of the state has agreed to them at the front end for its own substantive purposes. So I'd be surprised if there was any kind of question about the validity of it in terms of binding the state.
Based on your experience in dealing with the state of Connecticut, how long does it normally take in order to get full sign-off by the Office of the Attorney General for the state of Connecticut on whether this would be a binding contract upon the state of Connecticut?
I'm afraid I don't know the answer to that. It's probably ascertainable, but I don't know.
All right, through you, Mr. First Selectman, I'd like to have him pursue that on our behalf. We should know, and the bodies going forward should know when that's going to become binding. We're being asked to possibly authorize an authorization for bonding of $7.5 million. A lot of it seems to be contingent upon us getting back $2 to $3 million. I mean, I think that's great, and I commend you for that negotiation. However, to me, that's a major part of this, getting that $2 to $3 million, because otherwise, I'd have to consider the other options, but the other option is walking or delaying or whatever, and fighting this all out in court. But to me, that's a major part of this, and I'd like to know when we're going to know whether this is binding upon them. I would hate to find out a month and a half from now, or the week after we do some ribbon cutting, that, oh, you know what, he didn't really have the authority, the state doesn't have any more money, sorry, this is not working out. So I think we should start pursuing that, whether it be through Mr. Rediker or with the Attorney General's office.
Any other questions?
Yes. In the letter agreement, this August 23rd agreement, it refers to a CWA building. Does that stand for Customer Waiting Area?
I believe it does.
Okay, because it's not defined. I presume based on the context that that's what it meant, but I'm not positive. In the last paragraph, under number 2, it says, in consideration of this additional funding from DOT, the town commits to, and it really has three commitments on the town. Number 2 says, having the remaining work completed at a fixed price not to exceed $3 million. I thought we had a unit price contract. How can we commit that it's going to be $3 million? I mean, are we now going to go to a fixed price contract on this portion of it?
I believe that's the state's way of saying they're not going to contribute any more than $3 million.
What's your interpretation, Mr. Fisher? Because it says that we're going to have a fixed price.
That's how I interpret it. The state is basically stating in this letter that as a condition of their agreeing to the additional compensation, their payment is not going to exceed the $3 million.
Okay.
And I followed that also from the following paragraph, number 3, which says that any portion of the $3 million that's not spent by the town will be, they will reimburse the amount paid by the town up to the actual cost. And so it's not a it's not $3 million you get no matter what, it's your actual cost up to a cap of 3.
All right. Mr. Tetro, right before you presented this letter, you had stated that it was a requirement by the state that we approve a bonding resolution of $7.5 million. There's nothing in this letter that references that requirement. Am I missing something?
No, my point was that this money is going to be reimbursed to the state. So it means that we have to spend it first. So not reimbursed to the state, reimbursed by the state. So we would spend it first, as is customary with our school projects and as customary with this project up until this point. So that the full bonding resolution would have to be approved. We couldn't subtract this from that. Though, while we would spend the money during the balance of this fiscal year, next spring we'd be going out to bond on this, and because the state would have reimbursed us with this money before that, we would be bonding less at that point. We'd be bonding the net amount, not the full amount of the $7.5 million. But we still need the authorization to spend the $7.5 to get this reimbursement.
Can we not have some type of device in place where we authorize the spending but talk about a bonding amount for less money? And I'll open this up to bond counsel and fiscal officer and to you, whether you've had conversations about that.
Basically, the resolution we have says we're authorized to spend up until an amount.
Yes. So we can authorize that we could spend up to 7.5, but can't we say that we're only going to bond up to 5.5 of that? With the thought process is that, number one, we wouldn't have the bond go out until next spring, as you said anyway, first, and if we know that's going to be the case, why would we have a bond for 7.5 when we already know that it's going to be a max 5.5?
We don't know what the max is theoretically, though we are planning on spending more than this. But just to be clear, this says we're going to be reimbursed for our actual cost. If we build out the parking lot and build out the road for $1.5 million, that is all the state would give us. However, if it takes $2.5 million, they'll give us $2.5 million. So without knowing quite what that number is, it would be hard to determine that. Though there might be a way to pick another number that accomplishes what you want or partially what you want if you're just trying to limit the 7.5 down to a lower number.
Yeah, I'm trying to limit I mean, since we know if all the bodies approve of this, for you to execute this letter agreement pursuant to the letter that requires that, then we know that and we can confirm that this is legal with the state, and the Attorney General's office has signed off on the validity of it. It would assume that we have at a minimal $2 million. So we wouldn't need the 7.5. We'd need about 5.5 and maybe less. So it just seems to me, why should we have a bonding resolution out there for 7.5 when we're kind of going into the transaction knowing that we're not going to need the entire amount of that bond?
In point of fact, we're not. I mean, the issue is you're authorized to bond up until what you spend. So we're not authorized to bond more than what we spend to complete the project. So if we can finish the project with $3 million, we'd only be authorized to bond $3 million. The issue is we are, and you see that, and that's typically how we process our bond resolutions. What you're suggesting certainly wouldn't be impossible, but in the end, it doesn't change the amount we're going to bond next summer. So from this standpoint, we're going to bond what we spend. We're not going to bond more than we spend. So that allows us to say, look, if you want to break up the transaction, say we're authorized to spend or appropriate $7.5 million, you want to reduce that bonding resolution by some number down to maybe $1.5 million, just in case this only takes 1.8 or 1.9. It's anticipated it's going to take over $2 million. But I would hate to cut it that close, as we're finding out with other projects.
I understand how you don't want to cut it close.
Cut it back, what would you?
I understand why you don't want to cut it close, but on the other hand, I don't want to just have another $2 million hanging out there. I think that who's ever the first selectman should have to come back to the bodies if they need this additional $2 million and explain why they need it. As opposed to, just as though when we did the first bonding resolution for the $6 million, we didn't put $8 million in there and say we think it's going to be 6, but why don't you give us 8?
So what you're proposing is that we have a spending authorization or appropriation for 7.5 and have a separate bond resolution that says we'll bond up to 5.5 of that?
Based on this new agreement that you just handed to us, 10 minutes ago, yeah. I mean, and showing that we might get 2 and upwards of 3.
Not up to 3, not upwards of.
Up to 3. So somewhere between $2 million at a minimum.
And just to clarify, that's based on what the state will reimburse us for. So it's based on what the actual costs of constructing that are. Would it be appropriate perhaps to check with bond counsel to see how that, if there are any comments from him?
Yes, that would be great. Thank you.
Mr. Stafford, thank you for joining us today.
Happy to be here. Mr. Walsh, the resolution you have before you, actually, which is the next item, by the way.
And actually, to be fair to Mr. Walsh and everybody else here, we haven't, bonding resolution is the next item on the agenda, so it is in the packet, it is in the handouts that you have. We just haven't taken it up yet, but with everybody's permission, we'll just kind of start to include that now to clarify
Yeah,
this point.
if you'll notice in discussions that we had this week with the fiscal officer and the first selectman, there's a provision in this bonding resolution, which is provision number 10, which is different than what we normally have in these resolutions. And that, at the time, frankly, we had the discussion, we were not aware that there was any money coming from the DOT, but we put in catch-all language, if you look there, we put in the normal language that the town officials are authorized to seek grants, but then if you see there's language there that says any such grant or contributions would be first taken to pay any bond anticipation notes that were issued. But then I think to answer your question, shall reduce the amount of the bonds that can be issued pursuant to this resolution. So in my view, in our view, whatever grants were received would in effect, by operation of the resolution, reduce the amount of the authorization. So that if you do authorize 7.5 tonight, but if there are grants received of $2 million, it will, by operation of this language, reduce the resolution authorization to 5.5. If you received $3 million, it would reduce the authorization to 4.5.
And Mr. Stafford, one of the reasons we had that conversation is because we are exploring other grants. And there is a potential $400,000 grant that we might be able to get to help out with the intersection improvements. If that comes in, and again, we've been talking to the organization that may provide that since February, and they said they would, but it is now August and we still don't have it. And we don't have anything in writing that says we will get it. But they haven't said no, and they keep saying yes, so we're going to keep trying to get it. And assuming we get that, that would also go towards the $7.5 million and reduce the amount that we bond next summer.
So again, I think that the answer to your question is, first, the first selectman is right. We're only appropriating, you can only bond for what's actually spent. But beyond that, whatever actually is spent has got to be reduced by operation of this section, reduced by whatever grants are received in conjunction with the project.
And what would one have to do if they wanted to limit this resolution to being contingent upon the authority of this letter not only being authorized by the state of Connecticut through their Attorney General's office as being a binding contract, but also that it being signed off by the RTM and Board of Finance as well? I mean, is there a reason why we wouldn't put this agreement in this bonding resolution?
I think that the agreement, to answer the second question, I think the agreement itself, as I've seen the draft tonight, requires approval by the Board of Finance and the Board of Selectmen and the RTM before it's operative. So I think that agreement's not going to be operative till it's approved, and I don't know that we need to, frankly, add to your bond resolution what is really, I assume the first selectman and the Board of Selectmen is going to bring to the Board of Finance and the RTM as a separate action item, which is that agreement.
Okay.
Mr. Tefsher would have to answer that question, but if the agreement says it's got to be approved by those boards, it's got to go on their agenda and be approved. So until that's approved, I'm assuming that's sort of done in conjunction with what you're doing here.
The purpose of the letter from the Department of Transportation was specifically to address the, if you will, the approval process. We needed something that we could show in writing to the boards that we were going through that this was more than just talk. In answer to Mr. Walsh's point, the Commissioner of DOT is the person that signs these agreements. That is the person that signed the other DOT contracts we have. That is the authority level within the state to do that. Confirming that by a call to the Attorney General we should be able to take care of that, I would think, in fairly short order, to just allay Mr. Walsh's concerns. However, their process of going through to get this bonding money takes more than a few weeks. So to take that whole approval process out of our approval process and let us proceed, because we're under the gun at two levels. We need approval by August 30th, but most importantly, we run out of money on September 15th. So we start incurring additional costs that are not in any of these numbers on September 15th.
And Mr. Walsh,
so we would be shutting down the project. If we don't have authority to spend more than what has been already approved and authorized by the various town bodies. So that is why we would be, without this additional funding, we can't move past September 15th. So this was a way to show that, as substantively could by today, getting the Attorney General's opinion or comment on that, Commissioner Redeker is so authorized and can commit the state, shouldn't be any problem to confirm that. We won't have that tonight, though. But certainly, we could by the Board of Finance meeting, and I think there's a number of Board of Finance meeting members here that could confirm that we're making that commitment, and we'll have that available for their board as an open question.
And Mr. Walsh, I might add, because I asked this question earlier in the week or earlier in the month about the approval of grants, and my understanding is that in a number of cases, grants have just come to the Board of Selectmen and not gone anyplace else. I think by this agreement, as presented by the first Selectman tonight, that agreement clearly contemplates that this agreement does go to all three boards for approval and isn't just approved here.
Yeah, and I might suggest that might be because they might have felt a little slighted by the fact that there's been a lot of questions that the first Selectman signed side letter agreements giving up $6 million worth of revenue, or up to $6 million worth of revenue, and now these questions are being called out, and maybe they just want to make sure that all the boards and commissions themselves are being required to take a look at this.
Yeah. Yeah, I guess to comment there, and thank you, Mr. Spencer. I'm not quite sure who you meant by they, but just to clarify, that phrase was put in by me. And,
Okay.
And quite simply, as my colleagues, former colleagues on the Board of Finance will attest, I've probably been one of the most outspoken, loudly supportive board members of making sure this town follows good process, that we follow the charter, that we follow the good business practice, and making sure that folks are informed and the appropriate boards are asked and have a chance to approve on those. So I totally concur that we want to make sure that our approval process going forward is impeccable. And again, Mr. Walsh, I'll go back to, that is why this board initiated the legal review of the approval process, to make sure that this board is clear on what needs to be done from here. So in fact, the town is clear on what needs to be done from here. So there are no questions. Does that help?
Yes, it does. And I apologize. I might have been putting the cart before the horse in regards to going to the bonding resolution, which I know is not really before us, but
Will be momentarily.
it's a direct question, because to be quite honest, when, not only we, but the public looks at this thing, we have a bonding resolution for 7.5 that we're all sitting here with a wink wink and a letter that's unsigned saying we think it's really going to be 5.5. So that's why I'm trying to get the deal nailed down as closely as possible to what it seems to be, and that the state's agreeing to pick up at a minimum $2 million. So really, we should only happen to be put up approximately 5.5.
Yeah, again, just to clarify, I don't suspect, I would not characterize what we're doing as sitting up here with a wink wink at all. I think we're trying to get this totally out in the open doing that. The state is agreeing to reimburse us for the cost of building those stations, the parking lot and the roadway. It is our understanding, our estimate at this point, that will cost more than $2 million, but they're agreeing to reimburse us for the actual cost of building those components. Those are the two components they see as necessary to open the station. It's opening the station in October. That is what is the driving force of making them step up to do this. So that's all. And in terms of the intent all along is to not bond a single dollar more than we have to. That is traditionally how we do our projects. We get the actual cost and we bond for what we actually spend on that. If it makes you more comfortable addressing that, happy to see how we can address that. But as Mr. Stafford said, the bonding resolution clearly anticipates us having the ability to get in some additional money, both from the state and then possibly from, I think it's the Greater Bridgeport Regional Planning Agency that might be providing the $400,000 we mentioned before.
And where does that funding state now? Because that number was used throughout Mr. Centofanti's report. How long ago did we apply for those funds?
That's been an ongoing discussion. They're not included in any of our estimates going forward. We don't have anything in writing that says we're going to get that, so we have not included that. So
When-
we are proceeding, and we're going to follow up on that, but I would suspect that, or I'm going to suggest that as much as that's been known within the town, as much as that's been talked about by certain members of the project team, that has not been part of our planning until we get something more substantive from the planning authority. Now, I know Ms. Stenick followed up with that a bit during her term in office. And the planning authority has been supportive and has told us we will get some funding. And they have told us that since February, or thereabouts. But until we get something more substantive from them, we're not including that in. And they're not the only folks we'll look at for more money, but right now that's the one that's been talked about. We just don't have anything substantive to come back to this to even know the amount that the money might be provided at.
Can I just ask a question? Okay, Jim, I'm a little at a loss for the question about the 7.5 and the 5.5, only because these are two separate documents, the bonding resolution and the request, the statement that the state is going to be kind enough to give us up to possibly $3 million. It also says that all those parties, the Board of Finance, Board of Selectmen, and the RTM have to agree to this document. Theoretically, they can say, any one of them can say no, and then this document doesn't exist, in which case we still need $7.5 million to complete the project. So if we get more money, wonderful, we don't have to bond the entire thing, but at some point, this document has to mean something, and if you're anticipating that asking the Board of Selectmen, asking the Board of Finance, asking the RTM, and asking the Attorney General to say yes to something, that means that they could say no. And presumably it's not a rubber stamp. So if it's not a rubber stamp, you need both documents and you need the ability to go up to 7.5. So I don't understand why we wouldn't be doing it the way it's written. That's all.
Well, I guess my question is while I might be willing to do the transaction based on the fact that the state, as Mike properly called it, is being a great partner, and we're lucky that they've been able to step up in this regard, I think this body and all the town bodies have to make that decision of whether we do want to put 7.5 or maybe 5.5 is a more palatable number. I mean, certainly it makes it a more palatable number when you have the state being willing to put up 5 million, 2 million, up to 3, but let's just say the lower end 2. It makes it a more palatable situation as opposed to considering our other options. Or, I've not even heard from council regarding what his ideas are. We haven't even heard back from them what his stance on or any of those other agreements, whether Ken's side letter agreement is valid.
Right, that's September.
Yeah, I know.
Sometime in
But
September, that's why I asked,
it's something we have to consider, because when I'm looking at this whole project as a whole, what I'm seeing is that the town's really, what it's costing us is $19.5 million. We have $6 million out the door on a bond resolution that we've now fully complied with and paid. Mike's now asking us to do a further bond resolution for $7.5 million, bringing us $13.5. And Ken cut a deal privately without letting you or anybody else on any other town body, where he gave up our right to $6 million worth of revenue, bringing it to $19.5 million cost to this town.
Right, but that doesn't have to do what we're talking about right now, because really, he has taken that into consideration, because just by virtue of the fact that on the document he's saying none of this is going to be signed, it's not signed now. It's not signed because it hasn't gone before all three boards.
Mm-hmm.
So, to me, he's taken over where Ken dropped the ball on those things clearly, and I'm using that term because I don't know what term to actually use for it right now. I'm waiting to hear what the attorneys say in September, because to me, that was the biggest question. I kind of expected from the audit that we would not find that there was fraud. I was hoping that was the case. I didn't think there would be. I was happy to hear that it wasn't. I also, having gone through a desk drawer with like 12 copies of a document without a date on it, no signatures, I completely understand what you're talking about, the volume of paper. So from that perspective, we're in a different situation. Ken's not here, so bringing Ken back into the situation, he can be brought back in September when we need to deal with it. Right now, we're just trying to get through getting the train station finished, and to me, the chief thing is to figure out what's it going to cost, do we have enough money to do it, and let's get the show on the road, because eventually, hopefully, there'll be somebody in there who will pay taxes and get this thing give us more tax money to pay for schools and pay for other things. That's the whole reason that the train station was started in the beginning. So Ken is not here today.
No, I don't see him.
I know, for a change, right?
And I think your questions on the approval process are both
Yes.
valid, need to be addressed, and will be addressed at the appropriate time, which is September, but that is nothing we decide in the next few days is going to change what was done with the side letter or not done, so I think that there is a time when we need to ask that, and I think it's important this town get to the bottom of that, and that's why we're bringing that back at the request of this board. So, do you have any other questions in terms of the report?
Yeah, in regards to the $1 million contingency amount, so you're basically saying it's 6.5 to complete and $1 million of contingency. My calculation runs that's like 13% contingency. How did you come up with that amount? And have we talked to anybody about whether that's going to be a valid amount? Because clearly, in the original transaction, as noted by Mr. Centofanti, the project contingency was about 10%. And clearly, we blew right through that. And Mr. Centofanti's, one of his comments was that maybe in a project involved remediation of environmental things, there was really not a lot of thought process in regards to how we came up with around 10%. So how did you come up with that number, and how can we live with knowing that that number is a proper amount?
Okay. I'm going to ask Mr. Barnhart, if he's still here, to help address that. Mark, if you could come up to the mic to do that.
You have to turn on the mic.
But to set that up a little bit, it has a lot to do with the specific activities that are left at this point in the project. I totally concur with your comment and Mr. Centofanti's that earlier in the project, when there was so much that was unknown, especially with respect to the contamination, a larger contingency was very much needed. But we have looked at this backwards and forwards, and I'll let Mr. Barnhart step through how we got to this amount.
As you mentioned in your presentation, we have actual expenses reflected in this presentation through the end of June. We have yet to be reflected in these numbers, which are included in their estimated cost to complete July, August, September, October, in other words, for the balance of the project. There are three main tasks that remain to be completed. Those are the parking lot roadway, most specifically, and then the shoreline restoration work, which does include some additional PCB contamination, excavation, removal of some additional PCB contaminated soils, which has been a driver in terms of some of the cost overruns that we've experienced to date on this project. In looking at what we have left to do, the amount of work that's left, and the fact that some of that work does involve shoreline remediation work, including remediation of PCB impacted soils. While we think we have a pretty good idea in terms of the extent of those PCB impacted soils, we've done extensive sampling over the last several months to define the vertical and horizontal limits of those PCB impacted soils. At the same time, until you actually dig them up and take some additional confirmatory samples, there is a possibility that your numbers could be somewhat off. And so I think this is a reflection of that, some level of uncertainty. We have about 1,000, maybe a little less than 1,000 lineal feet of shoreline restoration work to be completed. And I think it's a reflection of some of the uncertainty inherent with doing remediation work of this kind that we felt that would be appropriate to carry a little extra contingency. I did review this number with the construction project manager, construction manager that was brought on board, did talk to the inspection team as well as the contractor, and on that basis I made a recommendation that we carry perhaps a little heavier contingency because, simply put, I don't really want to be back in this position later explaining to you why that might not have been enough. So I think that's why I recommended that amount.
Okay, you say a little heavier contingency. We're basically about out of money as of September 15th. And we're asking for a 13% contingency on an environmental problem. First of all, have we identified every ton of casting sands? Are we fully identified on the amount of casting sands we're going to be needing to take off site?
No, we are not. We have a projection in terms of the additional casting sands that we're going to excavate and remaining shoreline restoration work. We believe, again, it's based on about 800 to 1,000 lineal feet of shoreline restoration work that have to be done. It's generally found in depths of 2 to 4 feet, extends outward from the shoreline to some extent. There are projections based primarily on the part of our environmental consultant, which has done, boring samples as well as visual inspection of the area. So we think we have a pretty good handle in terms of what those numbers are, and we do have a range, and it's reflected in the excess soil number, and that range is we're going to generate between 10 and 15,000 cubic yards of soil that we're going to have to manage in some fashion on this site, and that predominantly comes from the remaining shoreline restoration work that has yet to be done. So that's our estimate.
So you have an estimate, and that's in the numbers, and then the contingencies for above and beyond that?
Correct.
Okay.
And in addition, I'm sorry, in addition to that, again, it's fairly straightforward in terms of doing the parking lot. We're essentially at grade. We have some final grading work to be done, and then essentially we're paving it. And we've carried a number associated with that. But as we progress the roadway, for the most part, again, that's pretty straightforward, but we have some utility coordination issues that could also impact beyond that what we forecast. We don't think that that's significant. Really, the uncertainty is inherent in the remediation effort, as it has been to date.
Okay, my concern, I guess, is that we still don't have the full number on the casting sands. We still have PCBs that, as you properly state, has probably not fully been identified, but we have done an extensive amount of testing. So you're probably feeling a little better about that number. But yet, that's 13%. And we still have an environmental problem, which have a way of escalating themselves. On other projects, more straightforward projects, projects that this board is handling right now at Sherman Elementary School, which is no environmental problems, air conditioning, HVAC, building a cafeteria, building some other space, we're unwilling at our level to consider anything less than a 15% contingency without any environmental issues. So I guess my question is, why would we be considering less than a 15% on an environmental problem and remediation that we still don't know the full depths of? Is there a reason? I don't know, because I mean, just a couple of weeks ago we're talking about the Sherman contingency on some straightforward construction work, and everyone's unwilling to reduce the contingency amount to meet certain budgets to less than 15%.
I'll offer a couple thoughts, and Mark, maybe you can pick up after this. One is that the Sherman School is totally different. That's a construction project. We're putting up walls, we're knocking walls down, we're moving walls, we're putting in ventilation in a very difficult environment. And we have a FEMA limit coming up against that we absolutely don't want to go anywhere near. So that's why we're as tough on that, I think, and appropriately so, by the way, as we are. I think this is, one, we're 85% to 90% done with the project. There is some additional shoreline remediation to go, as Mark said, but that is not the full scope of the additional work. That, in fact, a large piece of the additional work is the parking lot, the roadway, and other projects that are not tied to some of the wide fluctuations we've seen in the remediation and cleanup. So I think that is the simplest way to look at it in terms of not all the work is the shoreline remediation work, and that is not the largest part of the work that is left. And I think that's what Mark was trying to say. But Mark, I'll let you fill in any additional comments there.
No, I think that's a fair characterization. I think that in the sense that the parking lot and roadway probably constitutes, in terms of our numbers, 2/3 of the additional of remaining costs, I think. With respect to the remediation effort, just to put it in perspective, we have had the benefit of doing about 2/3 of the shoreline restoration work to date. So we have some idea of what we're likely to find out there. It's not to say that it's perfect, because conditions are variable. But we do have a general sense based on what we've done to date. And the big thing that has really driven the cost has been the investigation and remediation of these PCB impacted soils, which has grown exponentially. And we have completed most of that work. There is one cell remaining that we have yet to conduct the remediation of those PCB impacted soils. And as I indicated, we've spent a lot of time and effort to try to characterize what's there, the vertical, horizontal limits, so we know exactly what we're likely to find when we start digging. And our best estimate, and again, I tried to be very conservative in working with the environmental consultant, is that we're likely to find up to 750 tons of additional PCB contaminated soils. That sounds like a lot, but we've done 5,000 tons to date, or actually over 5,000 tons to date. So I think reasonable people could disagree in terms of the level of contingency that's appropriate. Again, I didn't derive this number or recommendation to the first selectman on my own. I did reach out and talk to a number of other folks, and again, based on where we think the project is and what's left to be done, and what we've experienced to date, we thought $1 million was a reasonable contingency.
And so, Mark, you're saying we basically have gone out to the professionals on site, the folks that have worked on this project for the last 2+ years, gotten their best input to create this number out of the best available information. And I guess Mr. Walsh, unless you're suggesting we should increase the 7.5 million, our goal in preparing that number was to make sure we came back for only one bite of the apple, that this was it. We wanted a number that we could own up to and make sure we deliver this project within that budget. So that was our guideline, that was Mark's guideline, that was our construction manager's guideline. That's what we've tried to do. But if you're concerned and want to propose we increase that, that could certainly be considered.
Now, my concern is that when I was on the RTM, and you were as well, when we approved this, I thought we were having one bite of the apple about that at that point in time. And now we're here for a second bite of the apple, which is a lot bigger than the first bite. So I think I'm trying to ask, what I consider to be germane questions, because anytime, as we have found with the environmental stuff, these numbers seem to escalate exponentially. I mean, how much are we over? I mean, do you have a rough estimate on both the casting sands and the PCBs? How many millions are we over on what the original budget was?
Well, I probably have a better...
Battery's probably dead.
Jerry, what can we do with it?
Can you use one of ours?
Can you use this right now?
Is it gone?
It's still red.
Okay.
He's going to use that one.
It's a multi-part question, but with respect to the PCB impacted soils, I have a pretty good grasp in terms of the numbers off the top of my head. We originally forecast that we would be excavating and removing for off-site disposal 2,500, roughly 2,500 tons, 2,535. As I mentioned, we're at present, our current projection with the 750 tons yet to be done is about 6,500 tons. So at $173 a ton, can't do the math quickly in my head, but it's over $1 million. And that's a major component of that. When we start looking at the excavation and removal of the casting sand, there's multiple components to it. You have the excavation work itself, You have the management of the soil on site and placement under a liner with additional material on top to provide for the required safety zone, if you will, so that it's not accessible to the public and the environment. And then you have the clean fill that has to go back in the hole from which you excavated this casting sand. Most of that work took place along the shoreline or in areas where there was a high water table, so you had treatment of groundwater and other contaminated water sources on site. The original estimate on that was less than $100,000, and our current projection is it'll be roughly $2 million. We hope it'll be slightly under that, but roughly $2 million. So there are a lot of components to it. I can mention just two because I know those off the top of my head, but I can get you a more detailed estimate with each of those components. But they're significant, and I think the presentation that was provided by the first selectman in June listed some of the major cost drivers in order of magnitude, and most of those were related to the remediation effort. And that was a significant part of the cost overruns associated with the project.
I think it's working.
That's why they give you the one with no cord.
He might have that working again. On the side of the collector, on the other left side. The $1 million contingency is just a concern of mine. I'm not trying to drive this number up. To be quite honest with you, Mr. Tetral, when I saw the 7.5 in the agenda the other day, when you submitted the agenda, I was quite frankly shocked that it was above the numbers of the 2.2 to 6.2 or whatever that was that you had initially put in. It makes sense that you're adding a contingency, considering that we had blown through the other contingency by leaps and bounds. So I'm not trying to increase this number at all. I mean, I'm just trying to bring it in as low as possible, just like I know you are. But it just concerns me anytime we're dealing with these remediation issues because, as we've seen, they've killed this project. And the previous first selectman accepted those risks when he changed that agreement. And now it's affecting our taxpayers to a great degree that we're asking now for $7.5 million. So that's the reason I'm asking about it. If you and our experts feel as though the $1 million for that contingency is going to be enough, I guess I will live with that number. But it's just I wanted to ask the questions because I know on other type of projects, simpler projects, we've asked for a 15% contingency.
Mr. Walsh, just to confirm, I think your questions are both very appropriate, and I think your concern is very appropriate. I think the asking how we come about that to make sure that we're justifying every dollar, as you are, I think is very appropriate. I think that what Mr. Barnhart stepped through was that we've used the best available information from the experts that are on site based on where we are and the tasks we have left to complete this project. And I think what we all want is a number that we will live with and live within, and make sure that we do everything we can not to spend all the money that's authorized. And I think looking at the tasks and the estimates, that's what Mr. Barnhart and his team have tried to do within this. And I fully support their number, their estimates, and beyond that, I don't know what else we can do to firm that up anymore.
Mr. Tetro, when you first came before the RTM and then subsequently to the Board of Selectmen and Board of Finance, the estimates that you gave from the 2.2 to 6.2, I might be wrong, it might have been 6.4, 6.4, were based on what you were looking at. What has driven the number to get to the full amount at this point in time? Is it the amount of casting sands that have been established? Is it the PCB numbers? What has been the driving force of getting that number to basically the highest end of that as opposed to the lower end of that estimate?
Okay, I'm going to suggest, I guess, a couple things here. And Mr. Barnhart, if I leave anything out, please feel free to chime in. One is that at that point in time, we had estimates through April 30th.
Yes.
So since then, we've gotten a lot more information on this. And as much as the numbers we're using today are through June 30th, we do have substantial estimates and some actuals through a lot of July. So that's May, June, July that's coming. Second, and we've seen some of the best case scenarios that we were hoping for not come through. As we've moved through that, we've moved through the bulk of the contamination, the bulk of the testing, the bulk of the excavating, the bulk of the transport, and the bulk of the clean fill or the replacement of the soil that we moved. So we're just at a different point in the project. But you are correct in pointing out, as I think is obvious from looking at the numbers when you look at the actuals and where the projections are, that contamination drove us to the high end on some of the estimates that were provided in the June presentation.
Okay, sorry.
No, go right ahead.
Mr. Walsh, back to you.
I'd asked a previous question about whether there, I think at the Board of Finance, Board of Selectmen joint meeting on this, about whether there was any type of
It's two separate projects. If we look at Mr. Tetro's bullet sheet on town obligations, it's clear that all of the, just about all of them, are included in the town developer project. They're not included in the state town project. And I sincerely question whether or not the town has an obligation to pay for those. Mr. Tetro has said that there's been an effort to get BlackRock Realty to contribute, and they have refused. Well, this is nothing new. BlackRock Realty was supposed to build the road, and it simply failed to do it. And that cost the taxpayers $19.4 million, plus $5 million from the town, apparently. And nothing was done to enforce that contract. Admittedly, it was poorly drawn, but there was still plenty of room to enforce it had the town saw fit to do so. And now we have a contract, a separate contract with the developer, which places the town really in the position of project manager. There's absolutely nothing in that agreement that obliges the town of Fairfield to pay for completing the project. The town has the obligation to complete it, assuming the money is there. So at this point, once again, we have BlackRock refusing to pay for something that should be its obligation. There is nothing in that agreement that says the amount that they were contributing, that BlackRock was contributing, was the maximum that it would contribute, nor is there anything in the agreement saying that the town would be responsible for paying for any cost overruns. Now, apparently, according to this presentation, the overruns are primarily all the things in the town developer agreement. And that raises the issue of when and if not, why not, are we going to enforce the agreement against BlackRock? Instead of asking them on bended knee to contribute, and when they refuse, simply going off and paying for it, I think the town finally should take a strong stand that it's not simply a request, it's an obligation. Otherwise, we are simply faced with another poorly drawn agreement. If the $4.4 million was not properly estimated for completion of all those items, then the problem is BlackRock's. because the town was never obliged to pay for anything. But here we are, we're going to pay for it. And it's very disappointing and frustrating to see the town simply easily agree to pay for something when BlackRock refuses to step up for its obligation.
Mr. Bisaka, are you coming to an end of your comments soon?
Not quite.
Okay, if you could speed that along, sir, because we may have other people, and we've got a lot to do tonight. And I did not set a time limit out of consideration to people, but if you're going to go on for this long, we may have to do that.
I'll yield my time to Mr. Bisaka. Well, between the buzzer going off and your admonition, it doesn't give me much time.
Well, it's been 5 minutes so far, sir.
But in any event, I think it's clear that the town had no financial obligation under the town developer agreement. And by the way, since I was not allowed to comment on the draft resolution, I assume I'll be able to come back.
Absolutely.
Yeah, okay, thank you.
Thank you. Does anyone else wish to talk? All right, back to the board. Any other comments? You okay?
I'd like, go ahead. Go ahead, Jerry. No, I'm going first last time. Why don't you go?
Well, you could use the regular microphone to correct the issue.
You corrected the issue?
Well, audio issue.
Okay. Go ahead, Jerry.
It's my understanding, correct me if I'm wrong, the fact that we're going forward to get the project completed doesn't take away any rights that we have to go back to anybody else for any other reasons later on, for challenges to contracts or anything else, correct?
I think I would defer to legal counsel on that. Mr. Fisher? Mr. Fisher, did you hear the question?
I did. As Mr. Tetro stated at the outset, these contracts are enforceable for the reasons that we've conducted ourselves as if they had, and the town has accepted all the benefits of them. What that means is that they're now enforceable. Nothing that is before this body for approval is going to change the fact that they're already enforceable. If the town canceled these projects or failed to perform the obligations on the town part of these contracts, that could impair our ability to enforce the obligations of the other parties. But nothing about the resolution in front of you now waives any rights we have against anybody that are created by these contracts.
Thank you.
Would I be allowed to respond to that?
No.
Take the floor.
Are you done? It's up to you, Mr. Walsh.
Sure. Mr. Fisher, you mind? I'm sorry.
Sure.
We just heard some comments by a member of the public, and I take it you disagree with those. At your review of our contracts, you disagree with those comments?
I think that's fair to say, but perhaps you want to be more specific about which one you'd like me to address.
Sure. About there being two separate contracts that, and that we could basically require BlackRock Realty under, I guess, that contract to basically pay more money because there's no limitation. And one of the things was that there was no limitation in the contract itself in regards to that being their outside liability, the $4.4 million.
And that actually has several questions inside it. First off, let's distinguish between are there two contracts and are there two projects. There certainly was one tripartite agreement to start with back in 2003. And the parties, as I look at that, were free to enter into additional agreements to carry out some of the plans that they had anticipated under that. And that's what it appears was done in 2010. That is to say, each party agreed. The state agreed that it would enter into a further agreement with the town to achieve some of the goals from the original, and BlackRock agreed with the town to enter into a further agreement to achieve some of those goals. And in fact, the state-town agreement from 2010 expressly states that it's conditioned on a separate contract between the town and BlackRock. So clearly all three parties signed documents acknowledging that they were entering into now two separate contracts. They each required the town to complete the project. Each of those contracts, the town state contract and the town BlackRock contract, entailed obligations on the town's part to hire the contractors, hire the consultants, the inspectors, and so forth to complete the project. And then the project was defined, with a long set of specifications. And now, within that project, and this is where my familiarity becomes a little bit less detailed, there are some portions that relate purely to the Department of Transportation's interests, and some portions that may relate, of course, to intersection improvements elsewhere, and some portions that relate to BlackRock. The exact dividing lines among those are, I don't know, have the precision about that. I think other folks in the town would. What I am clear about, however, is that the town assumed the obligation in both documents, with the state and with BlackRock, to finish that work.
And that's all the work, including the work that Mr. Tetro refers to, the 90-page environmental protection, the environmental requirements and things like that.
Everything that's been done in the last year.
Okay. And it's your belief, and it's your legal belief on behalf of the town that if we were to not follow through on our obligation to pay for that or to complete that work, that we'd be subject to lawsuit?
Yes, I mean, each of the contracts the town has addresses with varying degrees of specificity what would happen if we canceled right now. The town-state contract is very clear. It says in paragraph 15 that one of the obligations that the town assumes is that if we don't cancel, if we don't finish the project, if we cancel it, we have to refund to the state whatever portion of the $19.1 million we have received by that point. And the only exception would be if the state decided that the town had canceled it for good cause. But then it goes on to say that good cause will not include a shift in municipal priorities or a lack of funding. So not only is the state saying they decide what's good cause, but they signal in advance, and by the way, don't even ask if it has to do with your funding sources. So we know right away that a cancellation before completion means you refund everything you've gotten from the state. With regard to our contractors, Guerrera's contract, as someone mentioned, has an express cancellation clause, a termination for convenience clause. The town has the option of exercising that. The consequences, though, are you pay Guerrera everything they've earned to that point, plus the cost caused by the termination, which is to say demobilization, plus the profit and overhead they would have earned on the work they haven't finished yet. You would also owe all of the consultants, STV, Lorero, and the like, for all of the work that they have performed to that point. These contracts also, and Guerrera's in particular, talks about what happens if you suspend the job. That is to say, if we got to the September 15 point and didn't have enough money to keep paying them, then the town under Guerrera's contract can issue a suspension order. In that event, then the town owes Guerrera all their costs of keeping their forces in abeyance until such time as we're ready to get started again, plus the demob and the remob. So if there were a suspension, keeping the Guerrera contract alive to be completed later, but you had to suspend for cash flow, you know exactly how to calculate what additional monies would be owed to Guerrera.
All right, thank you. Just for 1 second.
Mr. Bisacca, public comment is over. Public comment is over. I'm going to ask you to respect that, please. Mr. Bisacca, public comment is over, sir. Mr. Walsh.
Mr. Tetro, I'd just like to tell Ms. Grosso that once again, her tape recorder's in play mode, so it's kind of distracting to hear Mr. Tetro talking while is that your tape recorder? Yeah. It's in play mode, it's not in record mode. I'm listening to Mr. Tetro's presentation again for the second time.
Was it more interesting?
You were better the second time.
I'm going to let that one go. Mr. Walsh, are there any other questions at this point?
Yes. In regards to the amount that's left to complete, I saw a number in Mr. Centofani's report saying there's $50,000 of legal fees. Is that the number? And if so, what's that for?
You'd have to
I don't know what that is for, is in Mr. Satrafani's report.
Okay.
Are you going back to the,
It's Exhibit D, which is Exhibit D to the report from the Board of Finance Subcommittee of the Metro Center. There's legal, and it's got $333,361 expended to date, and then this is through June 30th, 2011. July estimate was $10,000. Estimated cost to complete is $50,000. Is that an accurate number of when you put together your $7.5 million worth of funding requests? I'm not sure if you even know where that number came from. I'm not sure who prepared this.
I'm not sure either at this point. I assume Mr. Satrafani prepared that, but I will defer to Mr. Barnhart.
Exhibit D of your report, Kevin.
Yeah, that's the schedule we see from.
All right. Then Mr. Barnhart should be able to address that.
As Mr. Tetro indicated in his presentation, the town's retained independent counsel to answer some very specific questions related to the project. Counsel is here this evening. We also have bond counsel represented. I anticipate that there'll be costs not only associated with bond counsel and independent counsel being at these meetings, but subsequent meetings of Board of Finance and RTM. I talked with Mr. Hiller, who also obtained an estimate in terms of bond counsel requirements or fees associated with the bond issuance, should that be forthcoming, and that's the basis for this estimate. Those two things combined.
So that's Mr. Hiller's estimate?
A portion of it is with respect to bond counsel, costs associated with bond counsel, so I obtained that information from Mr. Hiller, and another portion is related to the retention of independent counsel. And I shared these estimates or information with First Selectman's office.
What's the estimate for fees for this $7.5 million bond resolution if we appropriate it, if we approve it? Out of the 50? It just seems like $50,000 is a lot of money to basically get us 2 more months down the road.
The derivation of the $50,000, Mr. Stassen had originally indicated $20,000 for his fees related to this. We had an initial estimate based on bond issuance next July, when we intend to issue something in excess of $40 million of bonds, and the costs attributable to that and the percentage that would be assignable to this project.
Would be $20,000.
Roughly.
And then, so the other $30,000 is being used for, are we talking about our independent counsel? The estimated costs between here and completion?
Yes, and to the extent to which additional fees are from the town attorney's office as well.
Okay.
Related, specific to the project. So, again, I hope it's a conservative estimate, reflective of my conversations with First Selectman's office and Mr. Hiller. Hopefully, we're not going to spend that money, but I need to put a budget together, and so I consulted with those sources to develop that budget in terms of projected cost.
All right, thank you. Mr. Tetro, just in regards, when I go through the numbers, and, one of the numbers that stands out is the legal fees spent to date of $333,361, plus now another $50,000. A significant amount of that, probably more than half of that, was through our own town attorney, which I was surprised until we got into this process, was billing, I guess, through this project, which is, number one, is he still doing that? And number two, has that been discussed on whether we should be doing that, whether that's proper, things like that? I mean, this goes back to your days on the Board of Finance, because One of the concerns I have is that we have some off-balance sheet, not financing, but payment of legal fees. I mean, we have a legal budget in this town, which we have a budgeting process for. I understand that this project involved, you know, the expenditure of legal fees, but as a town, when we have a town attorney and we have a town attorney budget, we've got to be kind of above board. And this is nothing against Mr. Saxel, because I know that he spent the time on it, but it gets back to, I guess, the prior first selectman, which I can't have you get inside his head, but where do we get to the point where we know what we're actually spending on our town attorney?
Let me suggest two things. One is that is slightly off topic, though a worthwhile question. I think we should at some point review that, certainly as part of the budget process, and if you wanted to review what's transpired in the past year, or as part of that, certainly look forward to having that discussion. Second, we have clearly set a guideline on this project and others that if there are any legal fees charged to this, they are relevant to the specific project and not part of any general overhead. So specifically, with respect to independent legal counsel that is reviewing the contracts, those legal fees would be assigned to this project because those contracts are about this project. With respect to the independent counsel that is reviewing the approval process, those would go against our legal department budget in our annual operating budget. So we've made that distinction to make sure that we are charging those appropriately. But beyond that, Mr. Walsh, if I could ask you to come back to either this presentation or where we are with your questions. I think you may have some more along the presentation lines.
I am going to follow up. I'm going to put in writing a special request that we have a special Board of Selectmen meeting, and I'm going to ask that it be a joint meeting then with the Board of Finance, because I don't think there's any confidence at all that anybody knows what is being spent in the town attorney's office and what projects money is being spent on, because we run 10 projects at a time sometimes, and we have no idea what our legal budget is then for the year. So I understand that we're here for the 7.5. These funds, including the $186,000 that have been spent on this project to the current town attorney, that was not part of his legal budget in any of those years. You know, I still think it's part of the project. I think it's a valid thing to discuss, but in trying to move things forward, I think we'll just set up a special Board of Selectmen / I'm going to request, and then a joint Board of Finance meeting, and I'll make a similar request to to Mr. Flynn, the Chairman of the Board of Finance, and we can just have a complete airing of this thing so we don't have to do it here.
I would think when we have all the facts together and can prepare for that discussion properly, that would be a better time to do it. But I concur with you that it's a reasonable discussion. Any other questions about this project, the item on the agenda currently before us?
I have no questions. I have some comments.
Do you have
if anybody else has any more questions?
No questions.
You have the floor if you'd like to make your comments.
Sure. As I said earlier, I was surprised, and maybe that's just my naivety of getting this $7.5 million request. And in essence, I guess I was hoping that in the first selectmen's estimates of the 2.2 or up to $6.4 million, I was hoping to come in between those numbers and it'd be less, and that we then have a partnership with our other partners, the state of Connecticut and BlackRock Realty, where maybe we could all share, as partners do, in these costs and try to resolve this issue. Clearly today, from what I've learned, and including the new agreement that I learned at earlier in this meeting, we clearly have 3 parties to this agreement, but really one other partner. And that is the state of Connecticut for, last year jumping in with their additional funding of 19.4, and now coming up with somewhere between $2 and $3 million of additional funding to try to get this project completed and this train station opened up during the month of October. While I understand that BlackRock Realty may be living by the terms of their agreement, I don't see them really as being a partner the way that their partners, the town of Fairfield and the state of Connecticut, stepped up to help them last year. and I concur with the First Selectman's point of view in that disappointment. And going forward, I would consider them to be a party to a contract that we will deal with, and both sides live up to their end of the arrangement as written, and that be it, if that's what their attitude is going to be, is that we all just, between us and BlackRock Realty, live within the terms of our agreement. It is disappointing to see the way this town stepped up to the plate and now is responsible for an additional $13.5 million, so $7.5 million today, if approved, and the $6 million of lost revenue to assist one of the parties in this agreement, the developer who was having difficulty at the time. This project as a whole has been, while I think a great project and a project that will benefit this town for years to come, has really, to me, gone, off the tracks. I mean, just not put a pun on it, but it just really has. It's unraveled within a year. Much of that, I believe, is because the previous First Selectman was not honest with the town bodies, and he definitely was not honest in regard to the loss of the $6 million of revenue. Something we'll continue to look on and see whether we have any recourse on that. But it's, I can't even tell you and I know both of you share in this, the disappointment to learn something that should be a happy day right now for us to be getting ready to open up this train station after 10 years, and now to be finding that these huge numbers we are potentially being left on the hook for. And I hear our legal counsel's recommendation and advice. I don't want to believe in it, but I'm a lawyer too, so I have to look at the facts and read those agreements as I see fit too. And I think we have some liability problems if we don't go forward. Liability issues that will exceed greatly the amount of this funding request. So I do not want to vote for this, but I'm having a hard time logically finding any other way around it, and might have to hold my nose as I vote for it, as a term that Carl Dickman used to use for pieces of legislation that he did not like. Because I'm afraid of the liability that could happen. Not only the liability for breaching contracts, but for also possibly pulling people and Guerrera back onto a site and being responsible for demobilization fees and remobilization fees and all sorts of things like that. I'm happy that we've gotten the state to be a partner and to assist us in this time of need. But I think a lot of things need to be looked at on how to prevent this situation from ever happening again. I mean, this whole project, the management of this whole project by the town who took on the project management of this thing has been run horribly. There are lemonade stands run better than this. I mean, it's insane. The fact that we have a First Selectman, a previous First Selectman, who is managing this process himself and has no records on which to judge, on which to base this, or to know where we stand, and that we're making decisions on behalf of this town and change orders and committing money we don't have yet or not even been approved on certain grants. It's ridiculous. And potentially you can make the argument that we're lucky we're not liable for more. But it's in great disgust that I'm going to have to probably vote in favor of this thing because of my fear of binding this town to greater liability going forward, and also a need to bring this project to completion and hopefully start making some of this money back. That's it.
All right. Mr. Walsh, thank you. I think any comments on your side?
I'm looking forward to September's meeting where we will find out about the process issues. a year ago, I had to hold my nose and vote on something in a similar way. And I just want to say that I think that I've been supportive of this project. The first time we talked about this project was 12 years ago, and I was working in Mark Barnhart's position, and I didn't think it would happen. I didn't think that it was necessarily a good project, and Vince Como was the chief of staff, and he felt the same way. And by the time we got through a year of looking at it and reviewing it and talking to the DOT, we saw a lot of benefit. And then, of course, Ken lost that election, and Mr. Metsopoulos came in and got the current developer in there. But the whole project, it's a great project. It's a great project. I really believe that with all my heart. And I want to say that, you know, it's extremely unfortunate that it got to the point where we had to come to the table and, in a sense, with the DOT, change terms. And in a sense, I don't want to say we bailed out the bank, certainly helped bail out the developer as well, but we all worked as partners. And I am very disappointed with BlackRock Realty. I would have expected more from them. I still hope, I will still continue to hope that in the next coming weeks, while it goes to the other boards, that perhaps Mr. Whittick and his partners will reconsider the fact that this is a partnership, there is an overage, and nobody necessarily could have prevented this, although there could have been certain things perhaps done by the first selectman to help at least monitor it as it was going on, the former first selectman, in terms of getting a project manager. But that was his choice. That wasn't the rest of our choices. So we can only look at what was done, and at this point try to salvage a project that hopefully will be a great project for our town in the future. And so I'm hoping that Mr. Whittick will, and his partners will consider helping us defray the costs that are involved in this. Thank you.
Thank you both. I think that as you look at this and as we lay out the options, it would be nice to get all three partners to step up. That today doesn't appear to be the case, but hopefully that may change. As we look at the benefits, the only way to achieve those, and the least expensive way to achieve those, is going forward with the project. No one's excited about spending another $7.5 million, even if we can get it to net out to significantly less than that with the help of the state. Nobody's excited about the options before us because the not going forward options are considerably more expensive to the town than going forward. But we're at the point that we must make a decision. So at this point, I think that it's time to end the discussion on this report and update and agenda item 3 and move on to agenda item 4, which is to hear, consider, and act upon a bond resolution of $7.5 million for costs associated with the Fairfield Metro Center. Mr. Hiller, are you prepared to present that resolution to us?
Resolution appropriating $7,500,000 for costs of completing third train station, Fairfield Metro Center, and related improvements, and authorizing the issuance of bonds in the principal amount of $7,500,000 to finance such appropriation. Want me to read the first page, or?
Would my two associates, any feeling as to whether you want Mr. Hiller to step through the rest of the reading of the first page?
I think we could waive the reading. I've read it.
You can waive, yeah, I'd waive the reading if you wanted to give us the highlights.
Can you take a moment and summarize that for us, specifically perhaps down by the resolve points?
I think Mr. Stafford is also here for, it recognizes the initial tripartite agreement signed in February 2003, which appropriated $6 million, which has been bonded in the past, and most recently, finally, in 2010. And that three-party agreement also identifies the town, Department of Transportation, the state of Connecticut, and the developer, BlackRock Realty, were responsible for the completion of specific improvements. That was amended during 2010, has been addressed here, and it does reference the financial difficulties which which BlackRock Realty had when they were placed in foreclosure by TD Bank. It further acknowledges the contribution of $19,100,000 from the state of Connecticut for the cost for the completion of the project. The $4,400,000, which has been received and spent from BlackRock Realty. The forfeiture of the conservation bond in the amount of $843,564, which has not been done yet, which is still under the control of the Conservation Commission. And obviously that there are significant additional costs which have been delineated here this evening for that to complete the project. I think the other key element is the rest of it is frankly boilerplate language that is in most bond resolutions to comply with state statute and IRS code. The key point, which Mr. Stashton spoke about earlier, is that the bond commission, and I see the bond committee, well, the bond committee is still all here. 5 members, the treasurer, the Shaughnessy, the 3 selectmen, and myself, would issue bonds or have the authority to issue bonds. Our intent would be to issue these bonds when we are selling bonds next July. But the amount is likely to be reduced by funds received by the letter from Commissioner at that point, and any other funds that may come forward, grants or any contribution. Hopefully, Mr. Winnick and BlackRock Realty may at some point decide to participate further.
All right, thank you, Mr. Hiller. Any questions from the board?
Well, just to talk further, is there a way, I mean, Mr. Sastrom, you think that the paragraph 10 just covers us in regards to the agreement, right? And you don't think anything further needs to be done?
Mr. Walsh, I do think that paragraph 10 covers you and any grants that are received. I think it clearly states that it doesn't state that the appropriation is reduced because that money wouldn't be spent. What it does state is that the amount of the bond authorization at $7.5 million is reduced by any grants or other contributions. There's other contributions there in the hopes that you've all expressed that your third quote-unquote partner will come forward.
You mean party right now, right?
I said quote-unquote partner. But any monies would reduce, by operation of this section, would reduce the bond authorization under this resolution, in our view.
If I could add to that, I think maybe Mr. Senafani may want to comment on this too. The first selectman earlier this evening talked about school construction grants. We are obviously in the process of constructing Fairfield additions and renovations to Fairfield Middle School. We appropriated in that case $24.7 million. It shows on the books of the town of Fairfield as an authorization of $24.7 million. We will receive funds from the state of Connecticut. We have not to date, I don't believe, received funds on that project, but we shall, and we anticipate those. We will borrow net of those things, but the authorization, which Mr. Senafani will put forward in the annual report of the town, will show that in a similar way that this is done in the past. One of the issues that I think Mr. Senafani and Mr. Kiley's committee alluded to in their report also was the fact that the current authorization that is on the books of the town of Fairfield is $6 million plus $4 million, which was received as federal grants. So there was a $10 million authorization for this project. That's going to require, frankly, in the June 30th of 2011 financial statements, a footnote as to what's happened, because there have been, obviously, as indicated here, significant funds that have been received beyond that. What this resolution does is for this new money, this clarifies that situation, and it makes it, from an accounting standpoint and from an audit standpoint, a clearer subject. So, for the reader of the financial statements, for the potential purchaser of our bonds, it's an easier read.
Okay. What looks better on our books, though, a $5.5 million loan or a $7.5 million loan?
Just to be clear, that the adjustment doesn't change the amount of bonding. It doesn't change the amount of the loan. All right, the actual amount we spend is the only way to change that. So we're not going to bond $7.5 million if we only spend $5.5 million.
Our indebtedness is only going to, if we only borrow 5.5, it's going to show there. We have a report or a thing which talks about authorized, unissued. But again, it gets reduced. The bond council is not going to let us borrow.
Mm-hmm.
If we get $2 million from the state of Connecticut, bond council is not going to sign off on our borrowing $7.5 million under this resolution. They will limit us to $5.5 million. And when Mr. Sanafani issues his report, it's going to show $5.5 million. And so the authorized portion, which is there, is that gap, let's say, is never going to become a true liability of the town.
What's the delay in getting the money back from the state from submitting the bills?
They're faster on this than they are on school projects. I don't think there's, to give you an example, we have not been notified to the state for the final audit on Tomlinson Middle School. Finished roughly 5 years.
I guess my question is, are we going to have $7.5 million out the door of our money before we get money back in from the state?
I would doubt very much in this case, given the history that the state has on this project, where they seem to be paying within a 60-day period. And if you look at it, the final payments, maybe perhaps not final payments, but the major payments are going to be paid before the end of the calendar year on this, that we would see the significant payments from the state within the first calendar quarter, and certainly prior to our issuance of any debt, any permanent debt on this obligation.
But Mr. Hill, if I might, and just to be absolutely clear, Mr. Walsh, I think that there's a very real possibility we could spend the $7.5 million or some portion thereof by the end of November. The state is taking between, I think, 60 and 90 days, Mr. Hill, to reimburse us on for this project. And I'd make a distinction between this and the school projects, because the school projects go through a different board and different reimbursement process, in essence, a different department in the state than what we're going through. We go through DOT to get reimbursed. So my concern would be that we need the authorization to spend up to the $7.5 million, because we very well may spend it before we get reimbursed, or some portion thereof. The other component is that we're also going to work very hard to finish this project for less than $7.5 million. So in addition to the state grants, hopefully we can finish the other parts sooner than that, though, Mr. Walsh, as you pointed out, we don't have the greatest track record on this project of finishing below budget. So I wouldn't want to count on that taking place.
Are there going to be amounts that we've expended already on either the road or the parking lot that we can submit almost after we have this agreement? Have there been any expenses expended so far on getting that parking lot or road ready that are expendable that the state might have to reimburse us for?
There are two levels of reimbursement. One, we are getting reimbursed on the project itself, though at this point we are close to running over the $19 million if we haven't done so already. We have told the state that we are in fact starting to shift our priorities subject to their requirement. that, so we are now focusing our construction activities on the roadway and the parking lot. So very definitely, before September 15th, we will start to expect monies on that, and they will reimburse us for those monies, correct?
Okay. If we need to expend the money before we start getting it back up to the 7.5, where does that money come from? Bond anticipation notes?
No, we would take this from, it would be an internal transfer, an accounting transfer within cash the town has available. We do not anticipate that any need to issue any temporary borrowings at this time. What it would do is it would, on a temporary basis, reduce our cash levels in accounts.
So we had $7.5 million available to advance?
Yeah, again, just to clarify, that is the normal way that we finance projects. We bill them and pay for them out of our normal cash flow. We then would issue bond anticipation notes once a year. As we did this summer, we went out to the market with $43 million. So in essence, prior to that, we had funded that amount of work out of our normal cash flow.
And in Mr. Centofanti's numbers, when he talks about 2011 expenditures, is he talking about expenditures that were listed in 2011 that go up to June 30th of 2011? I just want to make sure we're talking about the fiscal year, correct, not the calendar year. Right. Okay. And no further questions.
All right. Ms. Stenick? Any public comment at this time? All right, because of the, Mr. Prasak, if you would, because of the lateness of the hour, it's almost 8 o'clock, I'm going to limit public comment to 2 minutes each, please. I also should point out that we have a Board of Finance meeting concerning the same topic and an RTM meeting covering 2 nights shortly. So in the next week, there'll be 3 additional opportunities to speak on this.
My comments will not even take 2 minutes, Mr. President. First of all,
For a second, yeah.
I noticed in the draft resolution, under the paragraph which indicates the contributions made by the state and the developer, that the $5 million contribution called for in the state-town agreement was not listed. I assume that money has been spent, otherwise it would have an effect on the resolution for the $7.5 million. But I think it should be included in that paragraph because obviously if it was spent, it was a contribution by the town, which would be in addition to the $7.5 million. Secondly, concerning paragraph 1, my previous comments about the obligation to pay the costs of completion were limited to the relationship between the town and BlackRock. I'm well aware of all the repercussions if the town did not finish the job. But my issue is whether the town or BlackRock was responsible to pay for the additional costs necessary to complete the project. And in that regard, I believe the town was not, and the town should pursue its remedies against BlackRock.
Thank you. Any other members of the public? If you would, just come up to the mic, state your name and address, please. And same guideline, if you'd be kind enough to limit it to 2 minutes.
Catherine Braun, this isn't working. Catherine Braun, 245 Senator Avenue, R10 number, District 8. I have a couple of problems with semantics. In the 1, 2, 3, the 4th paragraph down, it says, in April, the town entered into an agreement with the DOT and the developer. The one with the developer is called a closing letter. It's not called an agreement. And I think you're going to run into trouble if you start acknowledging all kinds of changes and obligations. You're going to run into a ratification problem because my last conversation with First Selectman Tetro was that we could actually potentially pursue, we want to keep our options open against anybody. That would include BlackRock Realty. So I don't think we should talk about entering into an agreement pursuant to which the obligations were reassigned. I think we should keep it much more broad than that. Also, The thing about the conservation bond, towards the end of that paragraph, that was an obligation of BlackRock Realty under the tripartite agreement. That was not a new obligation. They always had to put up performance bond money, and in fact, that money is still sitting there separately to guarantee that the wetlands permit will be carried out. I do not believe that can or should be used towards the construction of this project until the permit conditions have been satisfied and found to exist and to be successful. And I don't think that'll happen until long after October. Also in paragraph 1, 2, 3 down, it's at the end of the paragraph, it sort of acknowledges that the developer had encountered financial difficulties. I see no reason that has to be in there. Why can't it just say the developer was not performing? That's why we're doing what the developer didn't do, and we continue to do so. And that's basically my problem with this whole deal of putting, you know, we've been hearing about $6 million on the RTM until tonight. Now it's $7.5 million. And I have a big concern that we're not going to keep our options open, and that by approving this and approving this bond resolution, we're going to basically ratify that now these are the town obligations, and it's going to be that much more difficult to go after anybody else to get compensated for other parties' failures to perform. And we as yet do not know what they are. I read the Board of Finance report, and it is rife and replete with problems, with internal controls, and many, many problems. In fact, I believe that we should not have been voting on this until we have independent counsel's complete interpretation as to whether those documents, we even have the authority to enter those documents and what the impact of that would be. And I don't think, I wasn't here at the beginning of this meeting, but I don't think we have that interpretation yet. So if former First Selectman Flato was acting outside of his authority and had no authority to enter those documents back in 2010, I think we need that answer before we vote on this. And I also think we have to be very careful that nothing we do now will make it difficult to get compensated later, because I can see problems, errors, and liability going in about 20 different directions here. And it just seems like the town is constantly saying, we'll pay the money, maybe later on in some date, we'll hope they'll be nice and be a real partner. So that's the problem I have with this. I do think you should change the wording.
Okay. Thank you, Ms. Braun. Anyone else from the public? All right. Hearing none, back to the board.
Right. Mr. Fisher. Mr. Fisher, just in response to that, please, about if there was anything to go back on anybody for. If we stop now, we definitely have some legal issues that will happen, from what I understood what you said before.
That's correct.
But if we don't complete, go ahead, I'm sorry.
Irrespective of what we eventually sort out about the approvals required and the approvals actually granted back in 2010, these agreements are enforceable. They're enforceable by the town, and they're enforceable against the town. They're enforceable by the town because the other parties signed them appropriately. They're enforceable against the town because the town has both ratified them by its conduct and has accepted the benefit of the performance of the other parties. So right now, we have contracts that are fully enforceable both ways. The approval of the additional funding in the bonding resolution doesn't change that. That is acting as if what's already the case is the case. And so if the town has rights with regarding these agreements, it has them before tonight's vote and it has them after tonight's vote.
Okay, so to be clear, if there was something that was done that we feel is inappropriate and conflicts with the contract, that we don't need to pay for it, we could go to court and sue over those items regardless of what we do here tonight, based to complete the project per the contract that we have shown that we are bona fide in, that we've already agreed to and committed to. We need to stick with our commitments, finish that, and then if we need to look at any lawsuits, potential lawsuits in the future, we can still do that.
Right, and in fact, it's even clearer in the other direction, which is to say that if the town were not able to complete its performance of these contracts, our ability to enforce our rights against the other parties would be diminished.
Thank you. Okay, I'm ready. Thank you very much.
You can stay there for a second. I'm just going to give you this bonding resolution to ask you a question, a couple questions. We had a member from the public.
Do you want bond counsel to answer that?
I'm going to have them each answer the questions independently because they deal with different subject matters legally. Okay. So there's a member from the public, Ms. Braun, who you might have heard her responses. And I'd just like to ask you in paragraph 3, the third whereas clause, on the second line at the end where it says the developer had encountered financial difficulties. Do you have any problem with that language in regards to our enforcement of this contract if we needed to enforce it in regards to saying that had encountered financial difficulties, being written the way it is in this bond resolution?
No, I don't.
Okay. In regards to the next whereas paragraph, she also addressed in the first line towards the end where it says the town entered into agreements with DOT and the developer, parentheses, the 2010 agreements. Do you have any problems with that language being in there as opposed to calling it a closing letter?
No, I don't, because it originally refers to them as agreements with a small a, which they clearly were, whatever they were called.
So you don't see that it would jeopardize our rights of anything?
Right.
Thanks. In the same paragraph towards the end, she addressed the amount of the conservation bonds. It's the second to last line of that same whereas clause where it says conservation bonds in the amount of $843,564 to the cost of completion of the project. Do you have any problem with that language being in this and jeopardizing the town's rights at all to enforce against either the developer or the state?
No, I don't.
Thank you. That's it. If you could just leave that up, and if I have bond counsel come up for a second, please. I kind of just, you have it already. Okay, I'll take that other one back. Thank you.
Thank you, Mr. Walsh.
Kind of the same exact line of questioning, except I guess I'm asking from you from a bond counsel side, whether in the third whereas clause where it says the developer has encountered financial difficulties as opposed to saying that he might have been in breach or might not, or whatever. Do you have any problems with the language as it's currently written in regards to your legal interpretation as bond counsel?
Well, let me say, Mr. Walsh, first. Obviously, we wrote the resolution, so I mean, these issues are interesting issues that were raised tonight, but I think that, frankly, Mr. Fisher is the one to answer the questions about the contract.
Yeah.
I will,
and I'm not asking for the contract side.
But what I will tell you is, I mean, to my knowledge, what happened in 2010 is the developer did encounter financial difficulties, and this sort of just recites that as part of the whereas clause.
Okay, so nothing you heard tonight changes your recommendation regarding this bonding resolution in regards to the third whereas clause?
No.
And the issues you might have heard raised tonight regarding the fourth whereas clause, you have no problem with the way they're written currently in the bonding resolution, correct?
We do not. In fact, the fourth whereas clause was written based on the fact that we understood that the special counsel for the town had decided that these were agreements that were enforceable against the town and by the town, and so the language was written to take that into account.
Thank you, Mr. Johnson. I appreciate your opinion.
All right. Any other questions? Then, since this is hearing none, we need a motion to move to approve this.
Motion to approve.
A second?
You second?
I'll second it. All in favor?
Aye.
Aye? Aye. All right. Note that the motion was approved unanimously. No other business since this is a special meeting. Do I hear a motion to adjourn?
Motion to adjourn.
Are you willing to second that? Second. All right, thank you. We have a second. All in favor? Yes. All in favor? Aye. Favor? Aye. Please note that the motion to adjourn was unanimous. Thank you, everybody, for sticking with us tonight. We greatly appreciate it.